All right. Hello, everybody. Welcome back to another episode of the Market Close. Rough day in the stock market for 2025. Quite frankly, it is the worst day, not only in 2025, but in the past 4 years. You got the S&P 500 right here that is down 5.7% on the day. 300 points down, the Dow Jones down 2,000 points. I mean, it is an absolute bloodbath and a flush out that we're seeing right now in the equity markets. We're going to have Dan Ives on in Twitter Spaces in about 5 minutes. And so he'll be joining, and we'll try to get some thoughts with him and some other speakers to see kind of how this is playing out. I'm going to have someone else join me today to help me walk through some of this analysis and kind of get their thoughts and perspectives on what's happening. You guys have seen him on the channel before. Sam, what's up?
What is down? That is the new phrase nowadays. What is down? Everything. Everything's down. We were just talking earlier, and it's very it's very tough to have the mental fortitude to be able to look at this and not just go all in. Because if that was the case, I think I would have went all in, probably 10% up.
I agree.
And I did go pretty hard, like 10% up on certain swing trades, but I also put on puts and I also put on hedges.
Yeah.
And I completely stopped myself out of the swing calls. And I sold the hedges probably too early. But I have TLT leaps that I've just been sitting on for quite some time. But to be honest, like when Amazon is down nearly like 40% from its all-time high, like that's that hurts a little bit.
I mean, it's obviously very disgusting. Again, we'll have Dan on in a couple minutes. We'll get a lot more of Sam's thoughts after we talk to Dan. But in general, Sam, did you expect the tariff volatility to be this bad? And can you kind of blame markets for reacting the way they are right now?
Nope. Because now, well, especially when Powell came on, well, first of all, everyone knew the tariffs were going to come, right? But the market thought for a while, and so did we, or at least I thought it, that this is just a bluff, right? He's not going to keep these tariffs on. This is a negotiation tactic, whatever. And then there was a rotation play into ex-US companies, ex-US regions, and the market got caught off sides. And there was like very little probability of a recession. Everyone's forecast as far as analyst firms go for the S&P 500 was like all the way at 7,000 above, maybe somewhere around 6,500. Friggin' what's the name of that guy who worked at JP Morgan who like flipped?
Mike Wilson?
Yeah, Mike Wilson. He became a bull, probably like 10% up from here. And it caught everyone off guard, man. And you know what? It was very easy to like reel people in February just to dump them all out. One thing that I saw online a lot, and I don't blame people because it's like, hey, I'm doing so great year to date, whatever. And then now it's like, whoops. I mean, honestly, I was very happy. I was up at some point this year. I was up like 20%. And then now not even close. So I think that is the part that freaks people out the most. The fact that nothing was priced in.
Yeah, I would agree. We'll get a lot more analysis from Sam right here. Obviously, this caught everybody off guard. Let me transition to the Twitter Spaces right here. We got Dan Ives live, and we'll both be talking to him from there. All right, let's go here. Let me know if the audio doesn't work, guys, but it should be working.
I just want to get your general thoughts on the craziness in this market. I could go through the 50 different things we have, but I just kind of want to throw it over to you. I appreciate you joining us, and we'll kick into it. I do not hear him. Is that on me?
I can't hear him either, but I can't hear him either. Dan, can you hear us?
Yeah. Sometimes we have those errors. Maybe you just have to leave and rejoin the space. All right. What would be a Spaces session without a little bit of technical difficulties? Here I am trying to cut off stock talk, and we're just going to lead into some technical difficulties.
No, you're good. I was wrapping it up anyway.
Yeah, that maybe. Oh, yeah, he just jumped. Okay, cool.
Yeah, no, he'll be back up in a second. I see we also got Ahmed up here. We'll throw it over him after in a second. I want to talk about, I think, what Jerome Powell was talking about, I think is a good topic to dig into as well. But Dan, we got you now.
Yeah, do you hear me?
We got you.
Okay.
How you doing today, sir?
Good, and glad everyone's here. I look, I mean, 25 years doing this job, right? From .com bubble to burst, September 11th, financial crisis, COVID lows. I mean, I'd put it as probably the biggest debacle that I've seen, and I'll characterize why. When you go through other ones, .com bubble burst, financial crisis, COVID, those were not self-inflicted. They were either system-driven or health or market. This is a self-inflicted economic Armageddon. And the reality is like for someone like me that talk to tech executives around the world all the time, investors around world all the time, the stocks are reflecting something so dire because I don't think investors realize the ramifications of what they've done in terms of supply chain, tariffs, costs, margins, what that does to the uncertainty of data center spending, overall AI spend, software, semi, retail, healthcare. It's all set and it's all self-inflicted. And the reality is, once you send the snowball going downhill, you can't stop it. Now, for those be like short-term pain, it's worth it. Have you ever been to a fab in Taiwan? You think that's happening here? You could keep watching Footloose movies and think we're going back to 85 tech stuff. That's not happening. Unless you want $3,000 iPhones and $400 sneakers. So the reality is that this and the tariff levels, that chart is it's laughable, right? I mean, it's a trade deficit chart turned into a weird formula that's a tariff percentage. Those are not real tariffs. So that's the reality. And I just see global investors across the board going to Europe, going to China, because that's essentially what we're seeing play out here.
Dan, and I'll throw it to Ahmed after this one. We're in kind of an in-between period right now where Wednesday was quote unquote Liberation Day. The tariffs are set to go into effect April 9th. I know China reacted today saying theirs are going to go into effect April 10th. And maybe would have thought there would be a little bit of negotiations going on, and maybe we just started to get a little bit of whispers from the Trump
Yeah, but
side.
also
But
think about the
I'm curious on the next week.
first administration. Gary Cohn, Yet Cudlow, Mnuchin. Who do you have next? Like that's the other issue. Like there, in terms of confidence with advisors and who's running this, and that's a big part of the issue too, right? In terms of like the street worries and like the reality. You talk about Fed. You just set off the biggest inflationary policy maybe in the history of the White House, and the Fed's gonna cut. No, seriously. I'm just trying to like walk through like what do you think Powell's gonna like? You just set off the biggest inflationary policy ever in 100 years, back to 1890. So he's gonna be like, yeah, we're gonna cut. So I'm being realistic, and that's why I want to hop on. That's why this is so dire.
Hey Dan, good to talk to you again here. Question on how you're navigating this with your clients. I mean, what types of questions are they
Sure.
asking you about how to navigate the tech trade, and are you telling them to kind of stay put right now?
Look, we're basically going like worst case scenarios. Like stocks right now, they're already reflecting 5-10% numbers cuts off the bat. Tech companies, no one's giving guidance in 1Q. Just to be clear, I don't care if it's Palantir, Microsoft, no one's giving guidance. So let's just set that to start. Then it's basically like, how bad does it get? What do numbers look like? What do margins look like? Like I've talked to executives, like they don't know. You can't call a number 1-800 Hey, this is into. I'm just curious about. I'm trying to walk you through why this is so bad, and it's different than every other time. And that's why we've spoken out, and it's so negative because I've probably talked to, I don't know, 3, 4, 500 investors this week, 50 tech executives. Like, so it's a pretty good subset, right? In terms of who I'm talking to. And we're just basically navigating like worst case, best case, valuations, where could they go if it's a recession, how long do the tariffs stay on, what happens when China retaliates, what does this do to growth, what are the ripple effects in terms as this plays out. And remember, it will take Apple if they move 10% of the supply chain, it would take 3 years and 20 billion. So anyone that has this concept that you're going to all of a sudden have a fab built in New Jersey or Texas and you're building iPhones, I want to I want to be, reading that fairy tale.
So Dan, do you think that Trump takes these tariffs off next week then? Or like
No,
how do you see it playing out?
again, it goes back to like if these tariffs stay on, let's just go back to the whole like, well, it's short term pain. Short term pain? As someone that went through 08, 09 in this job, you'd be telling people like what it's going to be, and like, no, but it's work. And then all of a sudden, 3 months later, you see what happens, and 6 months later, 9 months later. I don't think people understand the implications of what this policy actually means. So that's what it comes down to. The reason the street didn't move on the Vietnam, there's no credibility. First of all, it starts like when you show a chart that no economist in the world would ever characterize that as tariffs. So walk me through how you're going to have not a trade deficit with Cambodia. How's that going to Vietnam? They're going to buy more of our stuff than we're buying of theirs. It's laughable. And look, people can be like, they can say what they want. That's the reality. Market's not political. It's speaking.
So Dan, I mean, good to have you again, by the way. But
Yeah, it's great to be.
one thing I'll say is from my perspective, a lot of people are saying negotiation is not possible here because it would be bad optics for Trump and an ego hit for him. And on top of that, that countries, especially our allies, feel slighted. But from my standpoint, I feel like one or the other has to give because a lot of these countries can't survive without the US consumer. And so it seems like they have no choice but to negotiate. But like I said, at the same time, I don't know what the political optics for the White House. So what are your thoughts on that? Do you think before this April 9th deadline that we could see a softening of the scenario or?
Well, look, part of the problem is the numbers set out. Everyone, because like going back to the whole, like, Trump, people like reciprocal tariff, and I'm a believer in reciprocal tariffs. But let's just talk about the real numbers. When you throw up 60, 70, those are trade deficits. Again, it goes back to like, if a fifth grader was looking at that, they'd be like, what? Like, what is this? So where do you start with negotiations with real numbers? If I'm selling my house to you for $500,000 and you're like, I'll give you 2,000, how do you start negotiations there? So that's one thing. Two, it's about the pressure. Pressure in the Beltway is going to get real. And it comes down to like wealth effect. This is a real thing. I get all the tweets like, I'm worried. Like I'll take the near term pain. Trust me. Let's see where it is in like 3-6 months. Just like the UAW workers, like, yeah, we want to this is great. Okay, when the factories close, let's see what happens. When cars go up $10,000 to $12,000, when that does the demand destruction. When 40% of parts come from international, and half of engines you can't even make them in the U.S. I'm just going back to just the reality of what's happening versus some fairy tale Pinocchio, Beltway talk.
Dan, one thing I noticed in the tariff announcements, and I don't know if you noticed this as well, was the relatively lower tariffs for the South American region. Most countries named.
Yeah, Brazil, of course.
Yeah, in the 10% category. And then we saw that story today, and I don't know if it's entirely true, but I'm sure you saw it as well, with Apple considering moving some iPhone production to Brazil to avoid higher tariffs. Brazil's labeled at 10% tariff, India at 26, China at 34, which may be in addition to the 20% they're getting from fentanyl. But do you think there's maybe I don't want to say unannounced effort, but maybe
It's impossible.
to attempt at least to nearshore?
It's impossible. It's not like it goes back to the supply chain. Like for anyone that spent time in Asia and my whole career, Taiwan, China, the view that people have that you could actually move that to it's fictional. And they're like, well, I'm willing to take the pain. Okay, so pay $3,000 for a TV, pay $3,500 for an iPhone, pay $200, pay $200 and then it's 100. I mean, that's just the reality. It's like, again, goes back to like, if Back to the Future's on, you're watching Footloose and you're watching Knight Rider on TV, cool. You think we're going back there, textiles, bringing it back to the US? It's a laughable concept and the market speaking.
Sam, you
Now,
got your hand up?
I would just add, AI, for the first time in 30 years, the US has led China in tech. And I've talked about that for years. The biggest asset we have is US tech, in my view. What you're essentially doing is you're giving a body blow and an uppercut to tech from a supply chain, from spending, from data center, from CapEx with this. And that's why and that's why tech's reacting the way it is. It's that much of a disaster in terms of this policy that I find the most absurd thing that I've ever seen. In my career, many people I know that have done this 50 years would say the same thing.
What do you think is going to take then in that scenario, Dan? And I do agree with you, by the way, on the extent of the economic damage if this does go into effect. I'm still hoping.
Just wait. I let people like, oh, I'm willing to wait. When your portfolio goes down 50% and then you lose your job, and then things that you want to buy are 40% more. Let's see how that works out.
Yeah, so keeping all that in mind, and like I said, I agree with you on the potential impacts if this all does go into effect. I'm keeping hope that there will be some cooler minds that prevail, and there will be some sort of softening or negotiation over the next couple of weeks. It's not my base case because I've been expecting reasonability from this administration for most of the year and have not gotten it from a communication standpoint. So I'm not going to be as naive as to expect it as the base case, but I would hope for that. What I will say is what do you see as a potential market bottoming catalyst in this environment?
I don't know what it is, because the reality is that the longer this continues, the chances of recession basically it almost seals a recession as it continues. It's based on the uncertainty. You've already done damage just to begin with. And if this continues, you don't know. It's about where numbers go. Now, eventually, if you start to have some cooler heads prevail and you actually have some sort of extension, like a 6 month or something like that to negotiate, that obviously would be the best case. But it's one where it comes down to where do numbers go? Because right now you don't know the E on the PE, and that's the problem. And I'm gonna go in 2 minutes, but just glad it's worked.
I appreciate you,
Hey,
Dan, for coming on. Let's go over to Sam quickly, and then we'll see where we're at.
Yeah.
yeah, appreciate you, Dan. Thanks for coming on. Pleasure talking to you.
No, great time.
Wondering what your thoughts are as far as AI. Obviously, I work in IT. I've been working in IT for a couple of decades now. I use AI every day in my job. Makes my job much more efficient. Do you think that at some point there'll be an inflection point where the market starts forward looking again as far as the contribution toward AI, without keeping in mind the capex, but companies like Palo Alto and CrowdStrike, especially in cybersecurity? I know you're a big fan of these stocks. Do you see that starting to be pulled forward as far as being able to turn these high capex costs to lower costs, and therefore reducing the cost of goods sold and therefore increasing the margin. Do you see that happening maybe in like next couple of years?
Yeah, but the reality is, how are those things shipped on servers? Where they come from? Like, in other words, this is like this policy. The reason I've said it's Armageddon for tech, because I think it could take the U.S. tech industry back years in terms of what this is doing. Because I'm already talking to engineer and IT, like they're trying to figure out, oh, do we slow things? How do we get a certain part? Maybe we'll push that off, push this off. Guess what? They're doing that while China is full steam ahead. So, look, I wish I had better news, but it's like, remember, like when I'm doing it, and I know, like, look, haters, I get it. This, wait, I'm willing to wait, flip flop. I mean, when I talk to 500 people, whatever, between tech executives, global investors around the world, the last 72 hours, like, that's why I talk the way I do, because it's like I'm going to tell like it is. As someone that's been basically, a permabull for the last 25 years.
Dan, you got any final words for the people on here? We got about 2,000 on here.
Final
Another
words.
3,000 live on YouTube.
No, look, final words. Everyone on this call hope for something over the weekend in terms of a delay in tariffs or some cooler heads. Because if there's nothing over the weekend, we go into next week and it's a scary prospect, kind of.
All right, well,
That's it.
Dan,
Well, I'm sorry to leave on that note, but again, it's like it's about like trying to like hope for something, cooler heads prevail, and but that's what we got. Thanks,
Dan,
guys, and
appreciate you being here
have
with
a good
us.
weekend, everyone.
Okay, cool. That was Dan Ives on Spaces. Sam, you with me right here? He might still be in the Spaces. Okay, yeah. So Sam's still in the Spaces. We'll get him when he comes off the Spaces in a bit. All right, a couple seconds. Cool. So, obviously Dan's perspective is that he hates what's going on right now. The S&P 500 right here, we got 13 minutes until the market closes, 4.8% down on the day. A very, very ugly day on the S&P 500. Dan Ives basically echoing the same argument I've heard, quite frankly, since the market opened from a lot of different people that are out there trying to analyze this market, which is that over the weekend, hopefully there is some level of reprieve from the Trump administration. Now, based on what Trump tweeted today, it doesn't seem like he's ready to make any deals anytime soon. Definitely not in the next 48 hours. But the reason I think the bottom is falling out of the market, we are not literally at the lows. That was 505, but we're pretty damn close at 510, is because of the uncertainties that were created today. Now, what is really weird about this, and we'll spend some more time analyzing it in a bit, Bitcoin's up about 1.5%, which is pretty incredible that Bitcoin is up. And it's kind of going back to this argument that Bitcoin might truly actually, at least for today, be functioning as a hedge while the traditional global financial system is collapsing on itself. I mean, it is really interesting. If you're heavy crypto, heavy Bitcoin, you've got to be impressed by the fact that the NASDAQ is down, more than 5% today, down about 5.1%. Bitcoin tends to follow the NASDAQ. That's not the case. Now, this might be a sort of leading indicator on quantitative easing and money printing that inevitably will create more liquidity, which will help Bitcoin. But usually Bitcoin doesn't tend to go completely the opposite of the NASDAQ. But that is currently what we are seeing right now. Robinhood down 9.5%. SoFi down 10%. Tesla down 9.3%. S&P 500 again down 5%. Verizon down 5%, even with that dividend yield. Costco down 4%. I mean, pretty much every sector is getting hit. Those sort of recession-free stocks you thought would be a little bit better than usual. No, they are getting hit as well. Nvidia, $95, bottomed at 92 today, down 6.3%. Rocket Lab, down 7%. Snapchat's kind of green. That's probably because most people tend to take a stab at Snapchat when it gets to this low for the inevitable $12 pump and then dump back to $8. But you got Grab down 12%. MicroStrategy is obviously green because of Bitcoin. Again, GameStop green today, up 11%. I don't understand that one either, but GameStop is green, maybe off the perception that they're buying more Bitcoin. TLT is up because the 10-year is down. The 10-year currently right now is sitting just at 4%, which is not good. We want this thing to go down below 4%, but at least it's lower than what it was at the beginning of the week, which was at 4.35%. And obviously that's currently the state of how the 10-year is reacting with the broader markets. Why is all of this happening? By the way, Sam just messaged me. He'll be back in 11 minutes. He'll be back at 4 p.m. So we'll get his thoughts when he comes on at 4. And then Steve should be on at like 4:25-ish, 4:30-ish. So we'll get his thoughts about what's going on as well. We talked about this a lot during the morning. We heard from Jerome Powell today. For those that missed what Jerome Powell said, essentially, the way I would sum it up in a less intellectual way is he said, screw you, Trump. Like, we're not going to cut rates. You can tweet as many things as you want to tweet 5 minutes before I speak in front of the entire country about interest rates. You're not going to get me to cut rates. And the reason you're not going to get me to cut rates, or at least the reason it feels like Jay Powell is not going to budge on rates, is because tariffs are inflationary, as Dan Ives just talked about, and as a lot of economists have talked about over the past couple of days, especially the types of tariffs that the Trump administration is imposing. Again, if this was 10%, 15%, even 20% across the board, there would be some inflation. Maybe that inflation truly would be transitory. But the types of tariffs that Trump is rolling out leads this, from UBS's perspective, to believe 5% inflation is coming up pretty damn soon. So Trump tweeted this in the morning right before Jay Powell was speaking, saying, hey, stop playing politics. It's time to cut rates. Jay Powell, when he started talking, said that the administration has led us into a new territory of uncertainty. And that level of uncertainty is almost impossible to navigate. And companies can't really give earnings. It is difficult to be able to understand how to give guidance as well if you're a company. And on top of that, we can't say that the effects of tariffs are a one-time inflationary mechanism which allows us to price in further rate cuts because we know inflation is inevitably going to come down, because now we don't know if it's actually going to come down. Like, no one knows. I think this is the biggest reason why this market is so upsetting for people. It's not even that stocks are down. Like, people can handle when stocks go down. People can handle when stocks go down 5, 10%. It's the reasoning behind them going down. I don't think there's anything fundamental for a SoFi, a Hood, a Verizon, an Nvidia, a Rocket Lab to be down the way they're down over the past month. I think what it is a reaction from the equity markets, which are all intertwined algorithmically with the macro environment, to how the tariffs have been implemented. And I think that's what's pissing off people more than anything. It's just that they feel this was unnecessary, but it's happening. And as a result, you can kind of do nothing other than deal with it. The time to sell, I think, is not right now. But and for a lot of people that haven't sold by now, they're just sitting on their bags, including myself. And it sucks. It sucks for everybody. And I think that's why most people are upset right now. Fear and greed got to a low of 4 today. Let's see where it is at right now. We got the market close in 8 minutes. We are still at 4. I don't think we went below 4 today, but this just goes to show as well how unbelievably bad it got. I mean, a lot of us thought, including myself, hey, this is a buy the dip when fear and greed was at 15. Now we're at 4. I mean, for us to go even lower next week, yeah, we're going to see the S&P 500 below 5,000, which we haven't seen since April of 2024. And when we had that in April 2024, it was like 4,900, and it lasted for like 2 days, maybe even less than 2 days. It was based on the Israel-Iran stuff going on, and then immediately reversed. So realistically, we haven't seen a 4 handle on the S&P 500 since late 2023. And if we see that next week, I mean, I don't know if there's a Trump put in place in any meaningful way, but obviously it would be very aggressive if we end up getting that. The biggest headline of the day, and I've read a lot of reports since the market opened. I know people hate to hear this, but almost everyone is talking about this theory. The theory being that Trump wants the market to crash in order to get bond yields to come down and then refinance the debt. Trump, I'm not going to play the video again, but he posted a video on his Truth Social today, which quite literally, I mean, look at the title of this video. Trump is purposely crashing the stock market. like when he reposts a video saying, for someone who, a fan who made this video saying that this is why the markets are down, it's him co-signing like, yeah, this is what I want. I want the markets to go down in order to get interest rates lower to unlock the mortgage markets and everything else. By the way, mortgage rates down to 6.55%, which are good, but a lot of people don't care given their equity portfolios are getting hit so badly. One funny thing in this video is that in the beginning of the video, which I'll play right here, it mentions Warren Buffett. So let's take a little bit of a look at that.
The stock market by 20% this month, but he's doing it on purpose. And this is why Warren Buffett just said Trump is making the best economic moves he's seen in over 50 years. Now,
okay, Warren Buffett did not say that. And to confirm that he did not say that, Berkshire Hathaway put out a press release and they said there are reports currently circulating on social media regarding comments allegedly made by Warren E. Buffett. All such reports are false. Like the fact that Berkshire had to come out and literally say, hey, yeah, this is all bullshit. Like this is not happening. And the fact that the president of the United States reposted some random TikTok that is misquoting the great Warren Buffett. I mean, it's a sad state of affairs right now. I mean, what else can you say? It is a very, very sad state of affairs. But this is the nature of the market that we're in. And this is kind of how I think people are trying to understand what's going on right now. Are we in a bear market? I think the answer to that question is yes, but it's a bear market that can reverse rather quickly, which is why I think, selling covered calls on a day like this, A, the premiums aren't amazing because everything's red, but B, I would be kind of scared to sell covered calls on something like a Hood or NVIDIA because I think they could reverse pretty quickly. I think the whole market could reverse pretty quickly, but the caveat to that reversal, and maybe Bitcoin's giving us a little bit of an indicator that it thinks it's going to reverse, is a deal getting done that fundamentally reverses the nature of how these tariffs have been imposed. And I guess, over the weekend we'll find out if that happens. But so far, that's not been the case. Besant did a new interview with Tucker Carlson today as well. We'll play some clips of that in a bit. But here's one of the clips. This came out literally an hour ago of Besant speaking about the tariff strategy.
The people who are hoping that yesterday's move will lead to a demonstrably brighter future within 4 years. Is it your sincere prediction that within 4 years we'll say, actually, that kind of worked?
I believe that it's going to work. And I know that what we were doing wasn't working.
Yes.
So I think we have to try this. And I have a high confidence ratio it's going to work. And I have a very high confidence ratio. The good news is we have President Trump's previous term when everyone said none of this was going to work. Oh, the China tariffs are going to do this. They're going to cause inflation. They didn't. This is going to happen to working class. It's going to be bad for working class Americans. Well, guess what? Working class Americans, the hourly workers did better than supervisory workers. The bottom 50% of households, their net worth increased faster than the top 10% of households.
So I don't know how much confidence you got from what Besant was saying right here. I haven't watched the full podcast, but I am also feeling not as confident. And there's some more clips of this that we'll watch in a bit. But, there have been some reports internally in the White House, or some reports that are coming out that are saying Lutnick and Besant have been butting heads internally in terms of how to navigate this. Besant, it doesn't seem like, wow, S&P, oh my. 3 minutes until the close. Look at that flush out as we get into the close. 505 down 5.83%. There you go. 2 minutes into the close. You're seeing a really nasty drawdown right here on the S&P. But it seems like Besant didn't want the types of targeted tariffs that were implemented on April 2nd. It seems like he wanted a flat 10 or 20% across the board. Lutnick decided to go the opposite direction. And obviously Trump picked Lutnick's perspectives here and ideas, and the stock market reacted. And I don't know if Besant's necessarily okay with how this happened, but he's going to have to be a good player on the team right now. But who knows if he is around for the ride over the coming years or even over the coming weeks, months, if this policy doesn't change. S&P 500 right here down 5.76%. Again, Bitcoin is green. The NASDAQ down 5.9%. VIX is now at 40 right here. It does look like we are going to end out red. We got about a minute 15 until the market closes across the board, and it's going to be a nasty red. NVIDIA right here down 7%. Rocket Lab down 8%. Amazon down 4%. Nubank down 6%. SMCI below 30. JP Morgan, one of the biggest banks in the world, down 7%. TLT, one of the stocks that's green today. Broadcom's down 5%. Bank of America's down 7%. Shopify down 7%. And look at this red candle right there. I mean, we were at about 510, 511 a minute ago, and it looks like someone just dumped a ton as we get into the close. No one, I think, realistically is comfortable holding this market over the weekend. And playing this rodeo again come Monday morning to see how this ends up playing out. I mean, Sunday futures will begin the show again and see how badly markets are ready to deal with this. I mean, here's the big takeaway from all of this. There is still no certainty. So the idea that this is the bottom, I mean, like, yes, it does feel like max fear. It does feel like some level of capitulation, but it also feels like there is plenty of room down to go if Trump doesn't give us any level of clarity on the tariffs that are going to be imposed. Nasty, nasty, ugly day. We'll have some people to break it all down over the next few hours on the market close. Thank you, everybody, for being here. Friday, April 4th, the week of Liberation Day has turned into a lot of liquidation across the stock market. We are now officially closed. All right, markets are closed. The pain is done. As Elaine says right there, go enjoy your weekend. Take a walk. It's better than looking at the portfolio. Technically, we have after hours for the next 4 hours, so this could get still even worse on this first week of trading for Q2. But a pretty ugly day. The S&P 500 ends out 5.81%, 505.54. This is the worst day, if I'm not wrong, in 4 years. We've had some 3% days. We've had a bunch of 4% days. 2022, we had a 4.7% day. This is we did not get a negative 5.8% in 2022, if I'm not wrong. So, I mean, this is realistically one of the worst days in the past couple of years. Nike right here was actually green on the day. Palantir was down about 11%. Robinhood was down 9.8%. SoFi was down 10%. Tesla was down 10.42%. Verizon was down 6%. Rocket Lab was down 8.5%. NVIDIA was down 7.3%. Grab was down 12.4%. Newsmax was down 26.75% on the day. That one's still up 300% since IPO. Nubank right here down 7%. SMCI down 7.74%. Bank of America right here down 7%. Broadcom down 5%. Apple, ugly day on Apple, down about 20% for the week on Apple. That's another reason why Berkshire Hathaway is down about 7% on the day, even though that one is still green for the year by about 4%. But obviously got hit today. Pepsi was down on the day. Eli Lilly was down 6%, one of the biggest pharmaceutical companies in the world. Marathon, Bitcoin miner, actually a little green. Anything proxy Bitcoin outside of Robinhood, because it's more proxy the market versus Bitcoin, actually kind of held up today. Let's look at Coinbase. Was Coinbase green? No, Coinbase was down 6%. Okay, that's weird. You would think Coinbase might not get hit as badly, but Coinbase got hit as well. And then SMCI right here down 7.74%. Open Door, let's take a look at that one. We haven't looked at it in a minute. Wow, 98 cents. That was actually green on the day, probably because the 10-year was coming down, but still, I think it was $3 in the beginning of the year. So that one has taken a very, very nasty beating over the course of the past couple of months. Matt Money says, I tagged the bottom on my Nubank $12 leaps, which is a good segue for this question. What did you buy today? What did you buy today? If you bought anything today, put it in the chat and let us know if you bought anything. We should be having Sam come on in a second. And then we'll have Steve come on a little bit later. By the way, Matt, if you're free, let me know in the chat. I'll send you the link. You can join when Steve's on in like 15, 20 minutes. If not, no worries. We will still have Palantir Weekly tonight. Matt, Arnie, and myself will be on. Amir has a fever, so he's not going to make it today. But we will have Palantir Weekly later tonight. Okay, I see a bunch of NVIDIAs. I see a bunch of Palantirs. I see a bunch of S&P 500. I see some Teslas. We got Kelly right here. NVIDIA, Google, JetQ, and Hood. Makes sense. A lot of those names on a discount. We got Rocket Lab, NVIDIA, SMCI, IONQ, NVIDIA at 95. We got Michael with Uber. I see a lot of NVIDIAs here, which goes to the stat that we heard this morning. Hedge funds sold off stocks at their highest level yesterday since 2010. This came from Goldman Sachs this morning. JP Morgan reported that yesterday retail bought $4.7 billion worth of stocks. So you had retail say, hey, we think it's coming to a bottom. You have hedge funds going the opposite direction, which makes sense. Retail and hedge funds tend to disagree with each other, right? Like usually there's a sort of discrepancy there. Who's going to be right is I think the more interesting question. And obviously we will find out in the coming weeks who ends up being right. Matt bought some SoFi, AMD, NVIDIA. Nick bought some HIMS. I see a bunch of NVIDIAs here. Micron, Rivian, SOXL, so going long the semis. I got a bunch of hoods right here. TSM, Palantir, Tesla, all the usual suspects is what it looks like most of you guys took a stab at, which I don't I don't think you can blame yourself for buying on a day like this. I mean, like, is it the bottom? Who knows? Yesterday obviously was not the bottom, but I do not think anyone can feel like an idiot for buying at some of these levels or selling some. I mean, look, if you like Nvidia and you wanted it at 85 instead of 94 and you sold an $85 put, I mean, like, that's not, I think, the worst thing in the world either here today. TSM right here, 146, down about 7%. All the semis took it on the chin pretty badly. Micron, another 12%. Wow, this stock 150 to freaking 64 over the past 3 months. Hood in the 20s is next. I could see that happening. I absolutely could see that happening if we enter into, as Dan Ives was saying, a new economic paradigm where tariffs are the de facto norm. And those tariffs not only are the norm, but the types of tariffs that Trump implemented are the norm. Like, if it's 10, 20% tariffs across the board, it's whatever. We'll figure it out. If it really is 54% against China, then yeah, I think Hood could see the 20s, because I think the whole stock market will see a lot more pain. I think one thing that's important to understand is none of these stocks that are going down today, like a Palantir. I mean, I think I've been on the record with this, with some debates I've had with Steve, which is that Palantir will go down when the market goes down. You know, he thinks independently Palantir could go back to 40. I'm more in the corner of, I think if Palantir gets to 40, the whole market has collapsed. Palantir has been holding up relatively well. Obviously today the bottom fell out, going down 11%, but that's because I also think the whole market fell in accordance with it. Now, if they screw up earnings coming up in another month, then yeah, I mean, the bottom could continue to fall out for Palantir. But I don't think they're going to mess up earnings. I think earnings are going to be great. So then the question is going to become, how bad is the macro when they report earnings? And I have zero faith, quite frankly, even though my gut tells me that we're going to get through this in the next month or two, in terms of it's not going to be as bad as it is right now till the end of the year. But if it's this bad in the next month, I mean, yeah, no company's earnings can realistically save them from this. And even if a company like Palantir, which I do believe will thrive if we have some global recession, because their software is probably more in demand, it's not about the fact that their products are not in demand. It's about the multiples that the market is willing to pay for those earnings. And obviously, if we get into a recession, it's just going to be tough for the markets to justify that. Bitcoin right here, 83.9, still up 1.39% on the day. Everything after hours is down another 0.23%. The S&P 500 is down about 0.02, and then Tesla right here down about 0.5% as well after hours at 239. A lot of you guys are talking about that Vietnam stuff. So we talked about that in the morning. Trump did post that he has made some deals, or he's getting on the phone with Vietnam. I think this is just nonsense. Vietnam, before April 2nd, already said that they are willing to get rid of all their tariffs. So he's trying to claim a victory here. And for the people that didn't see the Vietnam headline a couple of days ago, they're probably impressed by this. They're like, oh, great. So Vietnam's finally capitulating. The tariffs are working. They were ready to do this before the tariffs even went into effect. So this is not a win to me. The market didn't react positively to this at all, because, like, A, the market already knew about this. B, it's just like, how much trade do we really do with Vietnam, right? Like, it's about $13 billion. Like, that's just not making a dent. So, I think that everything that he said today in regards to the stock market's working, we have all this great job growth, and we're making deals with other countries, it was all priced in. The market had nothing to say to it that was positive, because at the end of the day, China, which for those that missed the market open, retaliated this morning with 34% import tariffs on the United States against the 54% that we're now imposing against them. And yeah, that's the main reason why the market is not impressed by Vietnam taking off some of their tariffs. And that's currently describing a lot of the pain that we're seeing right now. Oh, sorry, you're right. It was Cambodia. The 13 billion was Cambodia. I actually don't know how much trade we do with Vietnam, but I mean, it's not enough, I think, to meaningfully move the needle. But yeah, 13 billion was with Cambodia. Which was another headline this morning, that Cambodia is willing to take their tariffs from 35% to 5%, which, again, that's great. Awesome. But, like, does that really matter in the context of how bad these tariffs are? So I think that's the simple story. Like, if anyone asks you, why is the market tanking? You say Trump. Like, it's not J-Powell. It's not the Fed. It's not interest rates. It's not inflation. It's not the American consumer. It is Trump and these tariffs. And you either have a school of thought that believes that that's okay, and it's not that big of a deal, and eventually this is short-term pain for long-term gain, or you have a school of thought that says, all right, so when is that going to reverse? And is that going to reverse? Because if it doesn't, we are in for a lot more pain. Now, Chamath tweeted this in the morning, or tweeted this just now. I think this is another reason people are not really the biggest fan of this guy. It's just, in my opinion, it was a very pretentious tweet at this moment. But he said, oh, the stock market is crashing. Trump has ruined everything. This is the end. And then he says, or he could just shut the F up. The stock market has simply wrung out Biden's last grasp of free money before he lost the election. We are back to where we were a year ago. Chamath's not wrong that we're back to where we are a year ago. And Chamath's also not wrong that 2024 probably had some levels of stock market enthusiasm and momentum because of government spending. But to say that the entire bull run over the past 2 years was just based on government spending is a bit absurd because companies produced real earnings, right? And now obviously government printing led to more liquidity being in the markets, but those real earnings are not something that I think are deniable. And the question becomes, if Trump had not put on the types of tariffs he had put on, which we saw on Tuesday, as soon as it was just 10%, the market was ready to go higher because they were like, all right, we'll let you have your little tariff game. And we think earnings are now predictable. So we can put a multiple on it and we can start the process of recovering. But that was changed as soon as this new tariff policy went into effect. So I think Chamath's argument about how, oh, well, the Biden free money is gone. It's like, that's right to an extent, but that is not the full picture at all. And I think a lot of people that are friendly with the Trump administration, people that are publicly advocating it for it, David Sachs, et cetera, their argument is we got to go through this detox period. And they're trying to paint the last 4 years as just like this entirely fake market that didn't matter. Nothing was real, yada, yada. Again, there are some merits to that argument, but that is not enough to justify the extent of the pain that we're feeling with tariffs right now. And the market is really calling BS on it, which is why we're seeing equity prices get hit as badly as it's happening right now. Ugly day right here in the markets. Let's get a little bit more coverage on kind of how this is playing out. We'll get Sam on in a couple minutes, and then we'll keep going from there. Steve will be on in about 15 minutes as well.
So back in 2020, this is the third worst from a point drop, a third worst drop for the Dow in its history.
Quite something to see. The NASDAQ closing in on a bear market, down more than 20%. That is bear market territory from its 52-week high. Our Christina Parks-Nevelis is at the NASDAQ market site. We'll look at some of the most shocking declines. Christina?
Where do I begin? Well, the market plunge really accelerated among tech names just this afternoon. I'm going to look specifically at the NASDAQ 100, which really looks at the largest 100 non-financial firms. Lululemon and MicroStrategy, only those two names, MicroStrategy, big holder of Bitcoin, the only two names to close in the green out of 100 names. And ever since tariffs were announced on Wednesday, Mondelez is the only stock on the NASDAQ 100 in the green during the last two sessions, and just barely up maybe 1% over the last 2 days. And half the index, 50 names, down at least 10% or more. NVIDIA, off to talk about it, plunged more than 14% over the last 2 days. And I say that because that's when the tariff news came out, wiping out nearly $400 billion in market cap. That's like wiping out an entire Netflix or Oracle. Amazon seeing its longest weekly losing streak since 2008. Remember those times? Apple down 13% week to date on supply chain disruptions, demand uncertainty. You can see double digits on your screen for both those names. And since I covered chips, really hit hard post-tariff news. The SMH ETF dropped about 15% in almost 2 days, far outpacing the broader market decline of 10% during the same period. And so traders really now are questioning if this sell-off marks a meaningful shift in market sentiment. I know you just discussed that, or merely a temporary correction, which might not be the case. Guys?
Christina Parks-Nevelis, thank you.
It's bad, dude. It is ugly and bad. The one bright lining is that it's Friday, and so it's over for now. But my goodness, this is bad. All right, so how are you guys navigating this? Let's get some perspectives from everyone here. Are you just sitting put? Are you putting away the portfolio? Are you looking at it? Are you buying the dip? Are you selling covered calls? Are you buying bleach? Like, how are you kind of thinking of this right now? It is absolutely going to be a long weekend. That is correct. Alcohol. Yeah, there might be a little bit of drinking this week. Here's my thing. This has been a rule of thumb for me. I think it's been a rule of thumb for a lot of people. If you don't need the money that is in the stock market in your day-to-day life, then it's one of those things where it feels really bad. But if you're playing with rent money, if you're investing rent money, then like it's a different level of pain because you need to pay rent. But if you have other sources of income outside of whatever's going on in the portfolio, and you can kind of just not look at it and quite frankly, just weather the storm by waiting it out, especially if you're not like an active trader, active portfolio manager, if you're just like buy and hold, kind of go long, which I know is most people, then I feel like it's a little bit more tolerable. If you're, day trading Tesla to pay rent, then it's a lot more difficult to kind of navigate how this is playing out. Eating bologna and ramen. Dude, I had a great lunch today. I think I had the most cost efficient lunch out of all of you guys. I had some oxygen. It's great. Filled me up. Some really, really good oxygen. But I think the oxygen is going to be tariffed soon. So I'm trying to breathe in as much as I can before we have to pay the tariffs. Did you check on TJ? Yeah, so I was texting with him in the morning. I don't know if you guys caught his stream, but he said he sold 150,000 shares of SoFi, all of his SoFi, and he replaced them with 3,000 Leaps. So he basically a more capital efficient strategy right here. I think his average was like 750 on SoFi. He sold all of the SoFi and replaced it with, I don't know what strike he has on Leaps. It's probably like $10 or something. No, it's probably not 10. It's probably like $5, $7 strikes. Most likely in the money. But that's the move that he made. I'm going to try to get him on the channel again. The schedules, like today was such a long market open. We had JPal, so we didn't have time for TJ. Like we most likely next week he will be on the channel. It's just even his schedule is getting so busy because he's been traveling as well. So we will get him on to explain kind of how he's navigating this. But everyone kind of has their own version of dealing with it. And obviously it's a really personal decision that everyone has to make in terms of figuring out what is the best strategy right here. Did Matt say he's free in the chat? I don't think he said he's free. Matt, if you're in the chat, let me know. I'll send you the link so you can hop on. I think Steve will be on in like 10 minutes, so we can get both of you on right here. Ben bought some NVIDIA Leaps. Ansh bought some Broadcom. Here's the other thing, and I heard this morning as well, which I think is fair. Like, dude, if you're going to be in the market for the next 4 to 5 decades, I mean, like, you're probably buying, right? Like, if you're in the market for the next 4 to 5 decades and you're not literally managing it on a day-to-day basis, like, buying stocks is what is going to matter. Accumulating more equity at a better price than what you could have bought it at months ago, 40 years from now, 50 years from now, even 5 years, even 2 years from now is going to probably matter. So I also don't think it is the worst thing in the world, especially if you're a bit younger, for engaging in the dip as well. Yeah, Matt's free. Why don't I see his comment? Okay, Matt, I'm sending you the link. All right, cool. I'm sending Matt the link right now. We will have Matt, Money, Steve, and Sam joining in a bit. We got Dougie right there. Bought Hood, NVIDIA, VOO, and Palantir. Yeah, it seems like those are the usual suspects that people have been buying today. I think, what caused all of this, quite frankly, is this water. I think the day I bought this, we topped out. And I feel like if I didn't buy this is how we topped out, dude. I had a little bit too much excess income. I wanted to get fancy, buy a $15 bottle of water. And it resulted in me being humbled because I can't afford a $15 bottle of water. But yeah, I'm sorry, guys. I'm really, really sorry that that's how it played out. All right, let's get some perspectives from some other people that have been trying to figure out how to navigate these markets and that, in my opinion, are kind of liking these dips because it's giving them opportunities to add. Mr. Matt Money, what's up?
How are you doing, brother? Thanks for having me on.
I'm happy you are on a Friday afternoon. I think a lot of people would really appreciate your analysis and guidance right here. I guess I'll just throw it to you, and you can answer this however you want. What is your reaction to the past 48 hours?
I would say I'm quite surprised. That doesn't mean I think it's a bad thing, but very surprised. I wasn't expecting this much of an impact in the market, but I think Chris said it very well yesterday morning when you had him on, and you might have reiterated it today. I mean, everyone was expecting some amount of tariffs, right? But I think the extent and the to be very frank, the size of the tariff, in my opinion, I think is much greater than what I was expecting. and I think I share the same sentiment as Mr. Patel as well. I was expecting kind of 10, 20% blanket across the board, maybe even up to 25% in some circumstances. So to see things north of that was quite surprising. But I don't know. I'm an optimist, I'm generally a glass half full kind of guy. And so I'm looking at where our market's going to be at the end of the year, where they're going to be in 2026 and 27. And same thing with the stocks that I have in my portfolio. And hey, we just went back in time 6 months, pick up, and sometimes cases a year after today. So yeah, pick up when you have the chance. It's like having the ability to have foresight, knowing that, in my opinion, you can get above 6,000 on the S&P, and you're getting prices you haven't seen. You have an 18% discount from the highs. Take advantage of it.
Do you think that these are going to actually be the final form tariffs when it's all said and done?
I don't think so. No, I mean, I agreed with you on your close yesterday. I was fortunate to listen to that as well. When you were listening to, who was it? Was it Besant that came on and was talking about how he doesn't think that they're going to make any deals? I think that's a load of shit. We saw what happened in 2018. We know that Trump verbally has stated when he talked in Air Force One yesterday that he's open to making deals if the right opportunity shows and arises. We know he's just a deal guy. He talks about it. That's what he campaigned on. And so to me, I think it's quite silly for anybody as an administration to even say that, because like you stated all day yesterday and today, it only adds uncertainty into the markets. If they straight up say, like, look, this is our stance. If we find a great opportunity, then come to us and we'll make it work. And if it's not a good deal, we won't make it work. Then to me, I think that's more inviting. That shows that we're flexible. And to me, that'll show this is the worst that it could get. Instead of coming at it and being like a pit bull and trying to make it seem like it could get worse from here, that's only going to drive more turmoil. So to me, like that's the way I would approach it personally, is it's like, look, we're trying to get back to an even footing, and we're open to making a deals if the right deals arise. And then you have mixed messaging coming from the rest of the administration. It just confuses things.
No, I agree. And obviously the volatility index up 47% in a day. I mean, it's aggressive. The S&P 500, by the way, for everyone who missed it, has closed below the August 5th levels of the yen carry trade. So you talk about a flush out from August 5th to March 2025, April 2025, all those gains pretty much wiped out. By the way, guys, Matt's YouTube right there is in the description, so please make sure to follow him up there. He goes live pretty much every weekend.
That is Sam's note in the private chat.
I'm sure I'll have plenty of analysis next week to try to navigate this as well. Yeah, Sam should be on in a couple minutes. He's still on those Twitter Spaces. Let's bring on another guest on the show.
Oh,
I'm happy these two I can get on together. It's always a privilege to have them on together. Joining us all the way.
Oh, there are the sirens. There's
from
the
the
sirens.
noisy New York. What's up, Steve?
You didn't tell me that Matt was going to be on.
I wanted to surprise you. A little bit surprised.
That's a nice surprise.
Did you get a good chicken parm for lunch there, Steven?
I didn't have time to go get a chicken parm today. I had to give a presentation as I was busy.
Man, they're making you work up there in New York? No wonder why people are leaving.
I had to settle for just a very quick sandwich. I didn't have time to wait for a chicken parm to be made. But Monday's a new day.
Don't skip over the presentation. Tell them how you gave it.
Oh, I was asked if I had a slide deck, and I said, no, I'm going to wing it.
And he won. he went in there. He BS'd for 40 minutes, and
no, it wasn't BS. I know everything stone cold. I mean, a presentation for some things is great. For what I was discussing, it just wasn't needed, and I would rather. It was more. I was discussing a certain topic that was interactive, so I wanted to have the ability to do a full. So a slide deck wouldn't have worked.
The most gangster shit that I ever did? I had to give this presentation about our future forecast and production for the next 2 years. Like, okay, cool. So everyone, I sat down, hooked up my computer to charge it, and everyone just looks to the presentation screen. And I say, that's funny. And I immediately start distributing paper copies of all the slides that people needed to look at. And they were like, impressive. And I was like, yes, it was. And so I was like, all right, next page. And people would, everyone uniformly would skip. People are taking notes, and that's probably why I got fired the next day. No, I'm just kidding. But anyway,
Matt,
one day I
you
want to
know
be in
why
a
else?
presentation like Steven.
You know why else I do it like that a lot of times? Because it allows me to open the floor for questions in front of, I think there's 110, 120 people there today. And when nobody asks questions and I ask 5 times throughout a 30-minute presentation, if there's any questions and nobody really has any questions, nobody can say that they were not told the information or they had any questions.
All right. Well, now that the floor is open for questions, Steve, S&P 500 down another 0.5% after hours at about 5:01. What was your reaction to the past 48 hours between the tariff announcements and the market reaction?
So I am not going to say 3 words that you told me not to say. So my reaction, and I'm glad Matt's here because I want to have a conversation about market psychology with this. And I think that if you are a short-term investor, you got really hurt the past couple of days. I think if you're a swing trader, you're not in a good place right now. I think if you're a long-term investor, as I am, it doesn't really change anything because the numbers in your account are fictitious until you sell. It's just a number. It changes every second of the day.
Yeah.
And if you have a long-term mindset, it doesn't matter. So let me back up. If you are not looking to exit a position for 3 or 5 years, wherever the volatility goes in the interim, it does not matter. Question is, back up to middle of February when we reached all-time highs, do you think that in 3 to 5 years from now, the market is going to be higher than that point or not? If you think you're going to be higher than that point, then there's no reason to lose sleep at night or listen to every little thing and try to make sense of stuff because volatility always happens. And if you zoom out and take a long-term snapshot of the market, you always have periods of volatility. You always have bear markets. You always have retracements. But ultimately, the markets go up. And right now, we're in a period of volatility. And I am not bothered the way other people are bothered about tariffs because I think that there are a lot of positions that are great buying opportunities right here. And over the weekend, there is a very good chance that over the weekend, we're going to get more news and more countries that come to the table. Monday or Tuesday, there could be press conferences. And by the end of next week or the end of the following week, nobody may be talking about tariffs anymore. And this could end up being a nothing burger that ends up being a huge buying opportunity. Because if countries come to the table and deal, because Trump thinks of himself as a deal maker, we may not be in the position people are painting right now. So it's too early to tell. What's going to matter, Q1 earnings, what the CEOs say, if they pull back guidance, if they stick with guidance, or if they take guidance down. So that's going to be the real telltale 3 weeks from now, not intraday what happens here.
I think it's a fair point. I think it's really hard to judge this market right now when we haven't even had Q1 earnings and we don't even know if the tariffs are actually going to stay in place. Sam, let me get to you real quick. S&P is down a little bit even more after hours. Do you think that Steve and Matt and myself, which we all share the same opinion, is correct, which is that Trump will make deals and these tariff rates won't be in place in a week or two?
No, I don't know. I don't know. And I think that's what the market's telling us, that we don't know. But probably the most educated guess that I can make as far as where Trump is at right now, and especially seeing the negotiation between Malay or Argentina and Trump, as well as I think was it Vietnam? I forget what it was, but there are a few other countries that also made deals as well. I think this will continue to take into effect. I would not be surprised if baseline gets put on April 9. I think the market is still trying to price that in. There was, like we were saying at the beginning of the pod, the market was calling Trump's bluff, and Trump turned around, was just like, nope. And then he showed his pocket aces, and the market folded or they mucked their hands. We don't want to show our hands, and that's what you're seeing today. You know, I don't know what's going to happen as far as that, and I could beat my brain to try to figure that out. I do think that there will be some sort of capitulation, and in fact, I think today might have been it, but I'm not going to go all in thinking that that is going to be the case, because when you have Wall Street analysts, Goldman Sachs, when you have Ed Yardeni, one of the biggest bulls on Wall Street, downgrading their targets twice on the S&P 500, the average price target was around high 6,000s. Now the average price target is around low 6,000s. They don't do that just because the market pulls back 5 or 10%. They do that if there is something that's materially changing or something that could be changing over the long term. When I start to see that, my defense system lights up, and I can't try to figure out. Actually, S&P 500, I don't think it lost all of its 24 gains, but like just to think the extremity that we're almost at a bear market, Qs are in a bear market, and so on. It, especially being under that 200-day moving average on all the indices and seeing all these small cap stocks getting smoked, it just makes you think, is the Fed going to come to save us? Because it usually is, but like they haven't. So the question is, even if Trump decides to negotiate, who's to say that something won't happen after that that'll add more uncertainty to the market? And if the Fed might not cut for the rest of the year, we still have a tight liquidity system. So there's a lot more to even think about other than, is Trump going to put these tariffs on April 9 or not? I do think there's going to be some negotiation and there's going to be some positive news coming out, but I don't know if this is going to be it. And again, just hearing how bearish Dan Ives was, I was like, wow, like this guy, he really just laid it all out there for us. And when you see Tom Lee capitulate, I think that's when we bottoms.
Steve, we had Dan Ives on about 30 minutes ago. He was pretty bearish on this. Do you kind of agree with him that this could be tech Armageddon?
Not really.
Why?
I'm in a different place than I guess everybody else at the moment. And I'm looking forward to next week because all the index funds that I'm in are all paying their dividends and I get to reinvest them at lower levels. Like I said, I'm a long-term investor. I'm not worried too much about what happens in a month or 3 months from now. And I think the market's going to be higher in a year from now. And I think there's real buying opportunities for people who have cash on the sideline. And there's a lot of short-term pain right now, but I'm just not seeing anything to make me think that this is going to be a doom and gloom scenario that gets extended, especially with oil prices coming down. And look, Amit, I'm driving. You can read what I sent to you and Matt last night because I can't regurgitate that better than the way I put it in the text message. But I think that there's a lot of things that are going to happen. And I think that this is just one component of an overall plan. And we're going to be in a much different situation in the fall and in the winter than we are today.
I just want to add.
Sorry, go ahead, Sam.
I just want to add there, just a response. Sorry to interrupt, but I mean, I'm going to be optimistic and think the market's going to be up in like a year. Like I have to do that because I also, most of my portfolio is long-term. I do have part of it attributed short term, and I've been fairly dormant with that, maybe making some small trades and stuff. But as far as a long-term goes, like I'm happy to buy Amazon at these prices. Definitely happy. But at the same time, you said if there's cash at the sidelines, if people have cash at the sidelines, it's time to put some money to work. And I agree with that. But I don't know if today is the day to just go all in and be like, well, that's it, right? Because there are some people who are not dollar cost averaging. So there's some people with a fixed portfolio amount. What I would say is that if you're dollar cost averaging every single week, then just by all means, just keep buying, doing what you're doing. But if you have a finite portfolio, it's very difficult to time those things. And I think especially if you're someone who's playing with money they can't afford to lose. I feel like with someone who has a finite amount of money, who's betting with their savings account, it's a very dangerous market to be in because you could have that cut in half from even today. It can, and then it could recover all that the following month. It can very easily happen. But at the same time, I mean, if I'm correct, like you have a very balanced portfolio that's not as much side and on the tech side. So the beta in your portfolio is much lighter than probably what a lot of people here actually are. So it's definitely something to think about.
Yeah, I mean, I'll just clarify what I mean by that. And look, I can't call tops and I can't call bottoms. Is today the bottom? Who knows? We could go down another 1,000 points next week. I couldn't tell you, I don't have a crystal ball. But a lot of people are sitting on a lot of gains, and Meta at 500 isn't really a scary number when people were buying between 100 or 200, or even people that were buying under 100. Amazon at 170 isn't a scary number for people who were buying years ago. So for people who just got in a market, this is a scary time. But for long-term investors, they're sitting on a lot of gains. And when you see the market go down 20, 25%, historically, that has been a pretty good time to add liquidity into your portfolio.
Yeah, I think I agree wholly with Steve. For the people that have their money right and operate their portfolios like a business, and Sam, you're in this boat as well, and I think Amit is as well. You're consistently adding, right? So for you guys, it's a machine at this point where you've said, you know what, I'm in a situation financially where I can continue to add, and in 10 years' time, this is going to be a blip on the radar, and it's going to be a great time to add. Very rarely do we exceed 18.5% dips in the S&P. Yes, when we see the big dips in 2020, 2022, and times before that, but very rarely do they go more than 25%. So it's kind of like if you were to be loading here, there could be a scenario where it extends out. And I hope that this is the case because like you guys, I add twice, 3 times a month. And if I can find, $1,000 here, $1,000 there, like I have been able to over the past couple of days, I'll do that. But I add
where are you finding $1,000 underneath the sofa or what's going on?
Yeah, like I'll do, I mean, there's things
you go to your bathroom and instead of the toilet paper, you use money to wipe your ass. Like is that
exactly? Yeah. So the $100 bills that I normally use to make my sandwiches, I decide I'll use tens. And so anyway, no, a bad joke, but I have money allocated for certain projects that I wanted to do. And I'm like, you know what? Because you're in a situation where you can obviously see the benefit of using this money, I'll find that money later, right? So like I wanted to put a pool into one of the properties, but instead I'm like, you know what? That might not happen until next year. I'll use that money that I was allocating for that and buy some stocks here today. But going into specifically, yes, I pawned my cigar and everything, or my not cigar, guitar and everything. People asking in the chat, but the folks that are maybe early on and like Steve alluded to, don't necessarily have that machine started as of yet, where they're adding consistently. This is going to be very scary times. But what I will say and what I hope is that this is somewhat extended, because I would love to get a couple months in of say 18 to 20% discounts. In the case of Rocket Lab, 50% discounts. In the case of Palantir, even more than 20%. I'm thinking we're probably 30 or 40% discount on things like Palantir from the highs. So to me, having an extended amount of time to be able to buy at these levels will be phenomenal. And I just hope that people are looking beyond that. So I don't necessarily 100% agree. Sam, you said don't blow all your load here. I don't think that if you blow all your load here, that you shouldn't be too upset, because come on,
yes,
guys.
Yes, someone needs to make a GIF out of this one.
we get what you're saying. It's just
yes. So I don't think you'll go much more down than 25% on the broader markets, or even up to 30%. I think there's definitely going to be some topics over the weekend or early next week where people come to the table.
You know what's interesting? Coca-Cola was not down tonight. Coca-Cola, when I saw it, was at 71. And to me,
safe haven.
Coca-Cola, but they have tremendous tariff risk. Tremendous.
Well, Steve, I mean, I would love to know your opinion on this. I don't know what you're going to say about this, but Bitcoin was up 2%.
I was very surprised about that one. I think it's because, sorry, you go ahead, Steve. Sorry about that.
No, I mean, Bitcoin finally acted as a hedge for once in its existence. Oh my God. People are buying because it's lower than it was. And I mean, it is what it is.
No, but if we are entering a new paradigm where Bitcoin is the hedge, because this is what's supposed to happen during these times, I mean, dude, could you imagine
But
Bitcoin
is
going
it happening
150K?
because people are just buying it as a flight to safety? Because that's what
I
they're
don't
looking
believe
at
it.
as. I mean, I don't know.
I don't believe it.
It's
I
not
don't.
for
I
me.
don't
I don't
believe it.
follow it.
Yeah.
Why
It
don't you
can-
believe that, Sam?
It can drop to 60K over the weekend. Like I would not. I understand the allocation to Bitcoin as far as flows goes on a day-to-day basis. Hey, this is holding. This is holding. It means the market. I would pay much more attention to treasury yields and bonds than Bitcoin as a barometer in terms of like the bottom in the market or not, or which direction we're going to go in. Because even though Bitcoin, what is it, like $1 trillion market cap or something? Bonds are way more, aren't they? Like
way more,
double digits or even like triple digit trillions. Nah, not even that trillions.
Look at just money market. You have 7.2 trillion sitting in just money market.
Yeah, like it's if you the degree of the 10-year moving, I don't know how many basis points it moved in like the last week or two. That takes a lot of money. Now that is the market actually saying something. Bitcoin staying at 83K isn't really like, oh, we're good guys, because it can literally fall to 70K in like the next few hours.
Okay, so here's a question. I want to go around the panel here. I just want you to give me a one-word answer, and then I want to get into the specifics for each of you. So the question is, if Trump is crashing the stock market to get bond yields down to better refinance the debt to deal with America's crippling rates on debt, is that a smart or stupid idea? Steve, smart or stupid?
Those aren't the two words that I would use.
But if you had to pick one.
It's a short-term thing, so it's smart to know.
Okay, Matt, is that smart or stupid?
People say I'm being MAGA Matt with this answer, so I'll be smart.
Okay, Sam, smart or stupid?
I mean, I know the Fed isn't going to do anything until they see the data to prove it. I think it would kind of be a bad idea to cut rates this soon in an aggressive manner. I'm sorry I have to explain this, but a quarter rate cut is fine, but like anything more than that would not be the smartest scenario unless things are just crumbling down.
So you think it's stupid for him to crash the markets then for that reasoning?
Wait, maybe I misheard your question.
Is it if he's trying to crash the markets and create volatility to get bond yields to go down, is that smart or is that stupid?
Oh, no, that's stupid, because then as soon as he flips, it's all going to go back the other way.
Okay, so I'll get back to you on that. Steve, why do you think short term that is a smart thing to do?
Do you mind reading my text, because I explained it in there, and
it was so eloquent, Steve.
Yes, if you could, that'd be great. I understand if you don't want to, it's going to take.
No, I don't want to. This is 7 paragraphs. I'm not going to read your essay right on.
Can I read it?
So
no,
like read if you don't want to read it.
No, just summarize. Like we don't have time to read your essay.
Read the one section about your question about bond rates.
See, this is how I know you can't BS presentations. You should be able to say this again.
I'm driving, and it was very well worded. If you want me to, I will explain it. But that was a shorter version of what I'm about to say.
Okay, so here's the paragraph. All right, this is the professional paragraph by Steve. So why is the Trump administration doubling down on tariffs right now? Trump tied his legacy to market performance. He's not out to tank the economy. I suspect trade imbalances are a convenient cover. The real driver might be the national debt, with annual interest payments topping $1 trillion and the Fed refusing to cut rates. Refinancing that debt is a pressing issue. The 10-year yield has already dropped from 4.5 to 4.0 this year without Fed action. By stringing chaos in the bond market, the administration could be aiming to push yields lower, slashing interest costs on refinanced debt. Tariffs might be less about protectionism and more about fiscal maneuvering. I think that makes a lot of sense, Steve, but it goes to Sam's argument here, which is that as soon as you reverse, the 10-year just flips and goes up.
So I understand Steve's point, and that one I kind of agree with, because if they bring the yields down significantly, the Treasury General Account, or the TGA, which is the Treasury's general check-ins account, right? That's being emptied right now. They're using that money, and when that debt ceiling talk comes into hand, I think that's like in May or something, Bissett is going to have to start issuing treasuries in some insane amount, right? If he issues, I don't know, I can't really think of the numbers off the top of my head because I'm trying to look up the chart in the Fed.com or stlouisfed.org. If they do that at the right time, he will literally save so much money as far as debt repayments go for the U.S. on an annual basis. And that will be their job. Because at the end of the day, Bissett wants to lower those debt payments, right? I don't think Bissett wants to crash the markets. I think he's as a seasoned hedge fund manager working for George Soros next to Stanley Druckenmiller in the 90s. I think he knows what the actions, the responses to their actions in the administration. So I think Bissett is very calculated on this. I can't really say the same for Trump. I think he's kind of winging it. But at the same time, they want those yields to come down. So is it a smart idea to do that? Probably not the best idea to do, best way to do it. But these mofos are just ripping that Band-Aid, dude.
Matt, so you agree with this. Here's the question for you. Do you think this works out and Trump looks like a genius, but we have to avoid a recession for it to really work out?
The last part makes it tough. Can I ask a clarification question? Can it be a Biden recession?
It could be. I mean, a recession's a recession. Right?
So if it's a Biden recession, I think that in that respect, it's plausible. But I think regardless, the media is going to always spin it negatively just based off the fact that it's left leaning. So even if Trump comes out, it'll be at the win of something else. It'll be the win of the global economy being strong. It'll be the win of some other sort of resiliency of the American people or something of the like. I don't think that they'll let Trump get the credit for it eventually turning the opposite direction. But that just could be me. Do I think that if things stay this way, we could enter a larger sort of recession? I'm going to say yes because Steve's home. I'm going to say yes because normally I'm too optimistic on these sorts of things. And I've been caught in the past being overly optimistic when I see numbers showing up and I'm like, it's not a big deal. If things stay the way they are, I could definitely see things really starting to heat up. And I think that it'll be very telling over the next 1 to 2 weeks if countries like China and many others that we do massive amounts of business with, like the EU, come to the table and we actually start to see some wiggle room downwards on our initial position that we outlaid yesterday. Maybe was it yesterday or 2 days ago? Then I think that we'll probably be able to escape a larger recession. We might have something like a Biden recession. If things stay where they're at for the next month or two, I definitely think that it's going to be very tough. You do have unemployment slightly on the rise. You do have larger debts and consumer debts continuing to rise. People aren't necessarily in the best space with respect to being able to refinance as of yet. That all takes time. And so having some sort of Trump put like it is kind of in place right now could definitely dive deeper. And I could see us going maybe even 30, 35% down on the broader markets, which is about slightly less than double the cuts we've already seen to date on the broader markets. Now, of course, other stocks have been impacted potentially more than 50% But yes, I'm going to say if things remain the way they are for the next 2 to 3 weeks and there's no wiggle room, recession is imminent. If we're able to get more talks to the tables within the next 2 weeks, then I think we'll be able to escape it with just a Biden recession.
Steve, are you there? I think he's getting set up. There he is.
Yeah, I had to take a call.
Okay, so Matt's argument was basically, I mean, if it works in the short term, even if you have some negative GDP growth, it's worth it. Are you of the same opinion as well?
I see how it plays out. I mean, I'm pro-America, so I want American businesses to thrive. And look, there is an imbalance in trade, and we got to see how it plays out. I think a lot of people are overthinking this and overlooking it. And I think most people are investing through 401ks or 403b plans. They're buying every 2 weeks into either target date funds, index funds, or total market funds. And for those people, they're going to be fine because they're buying the greatest companies in the market. They're buying every 2 weeks. They're buying on the way up. They're buying on the way down. And dividends are getting reinvested. And they have a long-term time horizon. If you have a month or a 3-month outlook, I wouldn't want to be in that position. But when you look at where these companies are, even if they go another 10% down before they start to rally again, I don't think that matters that much. I'm in a much different position. I mean, look at Palantir. Palantir is still at 70. I mean, it was at 20 a year and a half ago. So
Are you buying Palantir now?
No, but are people really that mad that it's not at 125? I mean, it's hard to be mad when you have 400% gains. So it's just, I don't think that there is a lot to really worry about, because at the end of the day, I do not believe the tariffs are going to be what they are right now. I think they're going to change. I think this is going to be a dial. It's going to be fine-tuned. And I think the ultimate goal, because the Fed was very clear that they will not cut rates until they either see inflation move toward the 2% mark or until unemployment goes up, that this administration is doing what they need to do to get bond yields to lower, because you have, I think the number is 9.5 trillion in debt coming due in the next couple of months.
Yep.
So they can try to refi at a lower level and shave money off of the interest. I mean, the interest is over $1 trillion a year that we are paying. And if the Fed is not going to do the right thing, because they haven't been doing the right thing, they're more about full employment and lowering the rate so we can refi the debt and pay 600 or 700 billion instead of $1 trillion a year.
Wait, but Steve,
less.
let me push back right there. You said the Fed hasn't been doing the right thing. If tariffs are inflationary and we cut rates, why does that not create stagflation?
So tariffs may not be inflationary. I think that this administration is not being very transparent on everything. And I'm just reading into a lot of things, and I could be 100% wrong on this. But they floated the idea of the $150,000 tax break, which I think will turn to a standard deduction if they actually get this passed. The way that they're going to sell it is they're going to try to say that Doge has created so much savings that they're able to do this. And while tariffs would give a immediate price increase on goods and services, a tax cut of that magnitude at a 150 standard deduction would more than offset it. And then through deregulation and less government spending, we would very easily have positive GDP growth. So I think there's a lot of things that are not being discussed, and I just think it's going to be take time to see what pans out and what doesn't. But I don't think tariffs is the real story here.
Okay, question to all three of you. Is there anything you're seeing outside of the tariff volatility that's troubling you? AI stuff, housing stuff. Is there anything, Sam, Matt, you're seeing that you're like a little uneasy about?
So one thing that I'm uneasy about and have been actually for a little bit of time was that listening to some earnings calls from a lot of especially cybersecurity companies, there's been an ongoing theme that there's IT spend budget cutting and deals taking a little bit longer to close. And they've been forecasting this for quite some time, yet valuation multiples have continued to expand. Like, for example, I heard it on SentinelOne earnings, I heard it on Palo Alto earnings, I heard it in CrowdStrike earnings. It's the ongoing theme. And you saw a lot of the guidance that's been coming out for the last couple of quarters with a lot of these software companies is that guidance is starting to restrict in, but yet the multiple is still rising. That I don't expect that to be any better next quarter. And that's something I'm a little concerned about. And that's part of the reason I'm not like, hey guys, I'm just going to go all in the market. I'm just going to take my time. I mean, regardless with the DCA, that does help me out. But at the same time, it's like, I don't know if I want to rush this right now because we haven't even seen the effect of that yet. You know, when I think you guys mentioned more than a few times, like if we see, geez, man, Trump is crazy. If we see, actually, certain tech companies don't provide guidance, but if we do see that CapEx spend as far as AI contracts, which I gotta be honest, I don't know if we're going to see that. I think a lot of people are hoping we're going to see that, but I don't think we're going to see that for certain companies, especially the hyperscalers. Microsoft already pulled back. I do accredit that to more of a Microsoft problem than an overall AI problem, but I definitely do think there's going to be some re-strategizing as far as where they're spending their money. But if we do see that contraction AI spend, I think that's just going to, I don't want to say the bottom's going to fall off, but that's going to cause a lot of volatility with a lot of these mega cap companies, especially the data center related ones and NVIDIA. at the end of the day, it's not going to matter, right? Like NVIDIA is the leader in it. Like they're the top dog in AI. Like they are the leader of this entire wave. So they'll be fine at the end of the day, but might cause some short-term volatility if that does happen.
Matt, anything you're seeing that's scaring you right now?
Scaring me right now, I think what would scare me is if the later phases of what Trump's plan had when he got elected don't go into place. And what do I mean by that? I think a lot of people are starting to only think about tariffs, which they think are a tax that is only going to be put, but there's so many other things, right, that are either coming off. So if you remember the 2018 U.S. income tax breaks that Trump had provided, they were going to roll off either at the end of last year or the beginning of this year, and those are going to be continued. So, hopefully people recognize the amount of money that they got back in their pockets starting in 2017, 2018, when Trump implemented those. So those will continue. So if he doesn't renew those, then that obviously shows that he wants to continue to increase taxes across the U.S., and that will be bad. Coupled with the business taxes going back to 21%, down from where they were, which I think Biden raised them. So that could partly offset. So I don't think that this tariff this tariff war, whatever you want to call it, is the last and only phase. I think that there's this phase, there's going to be negotiations, but then there's going to be follow-on opportunities. Just like Steve said so brilliantly in his text, that there's just going to be the opportunity to potentially change how the tax is done. Doge is going to have an impact in reducing the total deficit. We're going to refinance lower, and then eventually it's going to follow on to personal and business taxes. And with that, I think you're going to have much more investment within the U.S. economy. And just like Ronald Reagan wanted to do, it's going to have trickle-down effects with respect to everything. Do I anticipate that the thing that would scare me is if these tariffs kind of stay where they're at, because I think it's a huge pendulum swing, but I don't think so. I think that and that could scare me if it continues down that way, but I just don't think that's going to happen.
Steve, are you seeing anything that's scaring you outside of the tariff stuff? We might have lost him. All right, we'll get him back in a second. I agree with all of what both of you said. I agree with Matt that this is just phase one of how Trump plans to roll out his economic agenda. But with you, Sam, as well, with the IT budget stuff, I've seen those headlines also. And if we start seeing a decrease in SaaS spend, even if companies just want to, guard a little bit of cash because they're just afraid of the macro volatility and they're not willing to buy Palantir software or ServiceNow software as easily, or CrowdStrike's, right? Those stocks could obviously feel some pain from that. The question is just going to be how bad that damage ends up being. Okay, so here's a clip from Besant on Tucker Carlson. This is about a 4-minute clip talking about the stock market and tariffs. Came out just an hour ago. We'll listen to this and then we'll give our reactions on the back half.
So over the course of my life, 55 years, Wall Street really has been the commonly recognized measure of economic health. Like, how's the Dow doing? We've got entire TV channels devoted to tracking its progress, which has mostly been up during the course of my life. So if the average of, the equity averages fall, if the stock market falls, that's seen by a lot of people as like a measure that the economy itself is in decline. Do you think that's a fair measure?
Look, the market goes up and down. Warren Buffett has a saying, in the short run, the market's a voting machine. In the long run, it's a weighing machine. And in the long run, it's going to weigh, do we have good policies?
Yes.
And I in my former business, I commented on market structure, market ups and downs a lot. I'm trying not to do that.
Yes.
But for everyone who thinks that these market declines are all based on the president's economic policies, I can tell you that this market decline started with the Chinese AI announcement of DeepSeek.
Right.
So the so-called Mag 7, the tech stocks, had been doing very well for about 18 months, led the market. And I think that there was kind of a real dose of reality in what was going on in AI. And I think U.S. is going to remain the leader in AI, but the AI related stocks started coming down. So like if I were to analyze in my old hat, and this is the only time I'm going to talk about it, my old hat, what's happening with the market, I'd say it's more a Mag 7 problem and not a MAGA problem.
Right. So it's a deeper. So actually, the markets are, you're saying in this specific case with tech stocks, are taking like a real measure of the value of companies relative to foreign companies.
Well, it's that. But if we look with the equal weighted S&P, even after today's move, down 4% in the year, or in a long-term chart, you wouldn't even notice that.
Yeah.
And I think the most important thing that we can do, that I can do as the Treasury Secretary, that President Trump wants to do, is put in sound fundamentals for the underlying economy. And if the underlying economy is good, if taxes are stable, if businesses have predictability, if we have cheap and plentiful energy, if we deregulate, if we treat our workforce well, then we're going to have a great stock market.
Fair. The president suggested in describing his plan for tariffs, he said, look, you could conceivably fund a lot of government with tariffs. And that would suggest that taxpayers fund less of the burden. And so do you expect that these will be accompanied by a congressionally approved tax cut for the middle class?
Todd, I just want to go back for a moment too, that one of the things that the tariffs are doing is we are pushing back against other economic systems. So the Chinese have a very different economic system. They have low cost, some would call it literally slave labor. They subsidize industry with subsidized loans. They have a lot of non-tariff barriers. Your show can't be shown there.
Yes.
So we're pushing back against that, and with the tariff income, it can be substantial. And if we think like a classical model of tariff income would say, if there's a 10% tariff, then the currency would appreciate about 40% of that, so 4% of it. Then the producer in the other country would eat about 4%. And then the U.S. consumer might have a one-time price adjustment of 2%. So, in a 10% tariff, maybe the consumer pays 2% of it. We saw there's a study out recently from a group at MIT that shows that with President Trump's first China tariffs, which were approximately 20%, the price level went up 0.7. So to answer your question, if we could put on a 20% tariff and have the foreigners pay that and use that money to bring down our government deficit and keep taxes low here, that's a very unique formula that hasn't been tried in this country for a long time.
And do you
okay, Steve just left, but Sam, we'll start with you. Your reaction to what he said right there about the stock market and this new formula that they want to try out.
He knows what he's doing. Like, it's not like, I'm not saying what he's doing is the right way to do it. I'm just saying that the dude is not confused. Like, they got a plan. We don't know the whole layout of the plan. We don't know when they're going to execute, but this guy wants to bring the rates down. And it seems like they're going to talk their way into convincing everyone that this is the right way, even though we don't agree with them, because one of the big reasons that we don't agree with them is because we know it's going to impact the economy.
Yeah.
And I'm not MAGA. I actually have no political stance on anything. But I do like the way that hedge funds managers work. So I guess I'm Wall Street, make Wall Street great again or something like that. But from my perspective is that like Steve, I believe in America. And if you don't believe in America, then do not long stocks. Like, you have to believe that this is going to turn out fine unless you are massively short the stock market.
Do you believe that the Mag 7 is a DeepSeek problem and not a MAGA problem?
No, the Mag 7 is like 50% of the stock market or more. So that is an America problem. And there's no way of talking out of that one. If the stock market is forward looking, right? Maybe not 2 years ahead, but at least the next few months ahead. And if the market's going down, it's a very telling sign of where the economy's headed to this degree. unless it just bounces back. The market's not going to perceive and tell where the economy is going to be a few months from now as the price is today, but it is in price discovery mode, and that price discovery mode is going down, which means that the perception of the economy is going down. And usually the market bottoms way before, well, not way before, but it usually bottoms around the time when the worst has been priced in. Like the day that they announced that there's a recession is probably the day when we had already bottomed. But seeing the degree of how fast we're going down, I think there is a lot more uncertainty as far as where we're actually headed in the economy. I mean, I didn't think there was going to be a recession a few months ago, but now it's starting to paint the picture that it might be the case. But I don't know, maybe that's just price discovery ruining my judgment on that one.
I agree. By the way, guys, Steve will be back in 10. Matt, same question to you. Do you think the Max 7 decline is a DeepSeek AI issue, not a tariff issue? It's hard for me to believe that, given I don't think the fundamentals of Google are because of DeepSeek for it to be traded.
Yeah, I don't think it's DeepSeek. The thing that I think it is tariffs more so related. The thing that I think is very funny about this whole thing, and there's somebody in the chat saying, just wait till we start taxing services and media networks like Meta and Google and stuff like that in Europe. There's no way that anything in Europe, we talk about this all the time with Palantir, right? About how if they wanted to build some sort of great software company in Europe, or they wanted to have, they can't do it. The regulations won't let them do it. And that's exactly the reason why America has been so prosperous is, yes, even with all of our overregulation that I still believe we have in this country, we are less regulated than some of the more mature economies out there like Europe that allow us to continue to prosper. Cloud has been around now for probably on the order of 15 to 15 years or so, let's just say, since AWS has really started to kick off. If Europe really wanted to rid themselves of the United States and being able to create their own software companies, cloud businesses, and everything, they could have done it over the past 15 years. Why would it take them now to be able to do it? So to me, I think the real issue that people don't fully recognize yet, and they're like, oh, well, we'll just do our own thing. There's a lot of people, and I was just reminded of this in your chat, of the 4,000 people that are watching this that are non-US individuals. Yeah. If the United States economy wasn't that important, why would they be watching this channel? Obviously if
humor is,
I mean, that's 25 to 50% of it. I agree. You got some good, and Sam, obviously, those good looks are bringing in the, there you go. That's bringing in some folks. But to me, I just, I think people like to poke fun at America because it's easy. They like to poke fun at the fact that, we're doing some silly stuff. But to me, the way that I've seen things going down over the past few years, probably 20 years or so, continued regulation, higher taxes, to me, it's not necessarily the right path. I want to see something different. And to me, yes, it might seem like I'm MAGA Matt or whatever you guys want to call me. I don't really care. It's, just water off my back or whatever the hell the term is. But the thing that I'm curious to see is yes, let's, exactly like Sam said, let's see the whole thing play out before we truly judge it. I don't think we've seen everything panned out as of yet. And the thing that I don't see yet is if things were actually going that bad in Trump's mind, then people would be getting fired left and right. As far as I know of, there's only been like one or two people over the past 2 or 3 months that have actually been fired. So Trump is not afraid of firing people. He made a very big habit of it in the first term. And, he fired Mike Pence, obviously. Mike Pence is not the vice president. JD Vance is. So to me, if things were actually going that awry and not to plan as Trump wanted them to, he would have fired a shit ton of people already. But I think that the thing is that the plan is playing exactly like we wanted it to, or they wanted it to. And in this case, you need to give them some time to actually fully put it into place.
Yeah, and I think your broader argument here about the diversity of different viewers from different geographic locations, the reason they care about the American stock market is because they're invested in a lot of American stocks. And B, if our stock market goes to shit, aka our economy, the whole world ends up going to shit. And it's just like, that's why everyone cares about what's happening in America and how Trump is navigating this. What's really interesting to me here, I agree with your point that in Trump 1.0, we saw a lot of firings within the first, I would say, year, just because some people rubbed Trump the wrong way. He had a lot of random people in that he didn't really trust. This time, it's a lot more different. If we've had any firings, it's like low-level staffers. It's not really the Lutnicks or Besants of the world. Do you think, Matt, there is a world in which there becomes real conflict internally if this doesn't work the way they want it to work? And then how do you think Trump resolves that if it goes that route?
Ask the question again.
But basically, who takes the fall for this? Because we know it's not going to be Trump if it goes the wrong way. The same question to you, Sam. Who do you think takes the fall if this goes the wrong way?
I'll let Sam answer first if he has a. I'm thinking. If you have an answer, if you don't, then.
I think the person that. Yeah, I'm not following that whole stuff right now. So your guess is as good as mine when it comes to that. I think I was talking to Chris, and yeah, I think he was saying the same thing too. But I don't think I think he's in it to win it right now. I don't think he's not. I don't think he's concerned about his reputation. I mean, how old is the guy, right? He wants to go down as a legacy president. I hope they're going to succeed, because if they don't, I mean, I don't know where we're going to be in a few months from now, but I think the whole administration is going to take the fall for the whole thing. He's going there on camera and like showing all this stuff. So it's very, and even Besant's going on there. Like I can't see Besant walking back on what he's saying. Maybe he has, if for people who are paying very close attention, but I think the fact that no one's gotten fired or no one important has gotten fired to this point already shows that this time he means business, that sort of thing.
Yeah, I think I agree with that. I find it hard to believe that if this doesn't work in 3 years' time, let's say we're still in the midst or coming out of a very deep recession. I mean, maybe Trump won't admit it, but it'll be obvious that it was because of Trump, right? And because of what he did. So, and I think it'll be more evident if that's the path that it's going down, I'd say, in the next 2 to 3 weeks, than if within the next 2 to 3 weeks. I'm not an expert by any means, nor am I an oracle, but I feel like within the next 2 to 3 weeks, if things don't lighten up, then we could state that, okay, this was a mistake, right? I still just am cautiously optimistic, as I always am, about the markets and them being more resilient than I think people give credit for. That, to me, I don't feel the anxiety that I did during the 2022 pullback, right? I don't feel the anxiety that I did, let's say, in the 2018 pullback when the repo markets were. And maybe it's because I've gotten a little bit more of an iron stomach when it comes to like manning out these things and trying to be like, okay, this too shall pass. After winters come spring, that sort of mentality. Or maybe it's just because I have confidence in what's kind of going on, and I actually don't think it's going to be too big of a deal. I do see some weak points in the markets. I do see people not moving. Chris talks about that quite a bit with respect to mortgage rates and people having 3% mortgage rates, etc. And him and I are on a good point on that, but it's not stopping it. I have bought all my properties have above a 6.5% interest rate over the past 4 years, and I'm looking for my 5th property. Yeah. So if the consumer was really that lacking, then it would put things at a standstill. And I would say I'm not much different than most Americans, right? I mean, I'm not sitting there at the top 0.1% or anything like that. So I feel like a lot of people could resonate with me when it comes to what it's like to what.
Sam's giving you the side eye there.
Man, you're like you're not sitting at the top 0.1%, but you're sitting at like the top 0.05%.
0.05. You guys are too much. But anyway, no, you're good. Yeah, I mean, anyway, that may or may not answer your question, but I think if things in the in 2 to 3 weeks don't ease up, I think it'll be very evident that, oh shit, we might have stepped on a landmine. And I'll be happy to say that. And ask me again in 2 to 3 weeks, right? I hope I have more certainty in my voice, but it's hard to say.
Humble for houses.
Yeah, it is obviously something we're gonna have to see how it plays out. We were talking a bit about Europe and the diversification of the world that cares about the stock market. Here's what Besant had to say about how the EU is going to react to these tariffs.
Interesting. What about the rest of the world? What about Europe?
Look, the Europeans, we look back and there was the famous meeting where President Trump told the Europeans, you're insane for building Nord Stream 2. What are you doing? You already get most of your energy from Russia and you're going to double down on it? And they did. And look what happened. So
we blew it up.
Somebody did.
Well, somebody did. Probably Putin.
I don't. Some Norwegian fishermen bumped into it, is what I read. But the Europeans go kicking and screaming, but I think they're going to have to rebalance too. Germany has a very imbalanced export economy, and they were on the verge of deindustrialization. They were the opposite of us. They had expensive energy.
Yes.
They were depending on Italy and the countries in the south to keep the euro suppressed, and they were selling into China, and now China is becoming their competitor.
So you said at the outset, the first example, the analogy that you used was President Reagan's first term. Obviously big win in 80, recession of 82, wipeout, and then like the biggest landslide in history in 84. So you're suggesting by saying that the fruits were obvious within the first term, within 4 years.
They were. Only difference now is there was a lot of competition back then, but there's a level of civility.
Yes.
And the real danger here, if there were a midterm loss, and I don't think there has to be, you know what's going to happen. I know what's going to happen. Democratic House is going to go immediately to impeachment for something.
Of course.
Right? Like the lawfare is going to start again.
Yes.
And I think the American people are going to hate it again. So Einstein's definition of insanity, doing the same thing again and again and expecting a different outcome.
Do you think that, and this is really aimed at the people who support President Trump and who agree with you wholeheartedly that the current system was really bad, and like drive across the country, you'll see how bad it has been. Horrible. It lowered life expectancy. But the people who are hoping that yesterday's move will lead to a demonstrably brighter future within 4 years, is it your sincere prediction that within 4 years we'll say, actually, that kind of worked?
I believe that it's going to work. And I know that what we were doing wasn't working.
Yes.
So I think we have to try this. And I have a high confidence ratio it's going to work. And I have a very high confidence ratio. The good news is we have President Trump's previous term when everyone said none of this was going to work. Oh, yeah. The China tariffs are going to do this. They're going to cause inflation. They didn't. This is going to happen to working class. It's going to be bad for working class Americans. Well, guess what? Working class Americans, that hourly workers did better than supervisory workers. The bottom 50% of households, their net worth increased faster than the top 10% of households. And look, I'm not happy with what's going on in the market today, but the distribution of equities across households, the top 10% of Americans own 88% of equities, 88% of the stock market. The next 40% owns 12% of the stock market. The bottom 50 has debt. They have credit card bills. They rent their homes. They have auto loans, and we've got to give them some relief. That I was struck by the statistic from last year.
That's the message right there. Just as a bystander, I'm like, wow, okay.
All right.
And that's pretty much what Trump said this morning in a tweet, which is this idea that you can become very rich over the coming years if you don't have assets, because assets are becoming cheaper to buy. But obviously people that do have assets like us are going to take that as a hit. Steve, your reaction to what Besant just said?
I didn't hear anything of what he said.
You were backstage. You didn't hear?
I was backstage for like 30 seconds.
Okay, well, he said basically shit's going to get cheaper to buy. And if you're broke, you'll be able to get cheap assets.
Well, that means that for everybody who has assets already, they're going to lose money in the short term.
Correct.
But in the long term, they're going to be fine.
Yeah, pretty much.
I don't know what you want me to say. My stance is the same. As long as you have a long-term outlook, things are going to be fine. I mean, it's more important what the CEO is saying 3 and 4 weeks from now and what the guidance is for earnings than what is happening yesterday, today, and next week. And this story can completely change. I mean, the one thing that we know for sure with Trump is things can change in 30 minutes from when he says something. So it's very hard to make. I would hate to be a day trader in this type of environment because it's a zero-sum game. Mm-hmm. From a long-term perspective, if you keep buying every 2 weeks, if you're putting it into solid mutual funds and ETFs, you're probably going to do okay. If you're buying quality equities and they come down and you have the ability to buy more and you're buying great companies, most likely you're going to be okay. But at the same point, there are companies that have pretty much no tariff risk that are getting hit right now too. It's just the entire market is catering. And I think that this is what makes investors. You have to have the stomach for investing, and this is part of investing. If you're not able to stomach short-term volatility, you should just buy an index fund and be okay with that. Like maybe equities are not for you.
I think the real telltale sign is companies have to do mark-to-market accounting at this point. And so if there's actually going to be fundamental shifts in their forward cash flows and goodwill on their businesses, they have to write that down. And so what you'll see potentially from some businesses like Nike in particular, where if things don't get resolved in Vietnam, then they're going to have to write down a lot of their future cash flows. And unfortunately, that's going to show up reflecting in their goodwill on their books. And if that's the case, then you're going to see a huge negative EPS print because of mark-to-market accounting. It's not to say that from a cash in, cash out perspective, like we think, it's actually going to be that bad. I'm sure Nike will persevere and get through it. But when it comes to the brand and how much the actual value of everything that are on their books, the factories, etc., if the values aren't coming from that, they're going to have to write it down within the next 1 to 2 quarters. So I think it's too early to tell. Who's to say that that's actually going to show up in Q1? If it does, then that's something that's going to be very telling. And once again, it's going to be something there. I'm going to have to eat my words in 2 to 3 weeks, but I just think that won't be the case. And I think a lot of it is right now. I don't want to say it's crying wolf, but I think right now the pendulum has swung so much that people are just saying, "Oh, that's tough." Right. And I think we went through the same but more real scenario in 2022 when interest rates started to rise. Right. And I think that was more long-term and sustained. And obviously, once we started to look forward to the interest rates starting to get cut in the latter half of 22, early 2023, we saw the impacts that had on the stock market, and eventually we got over it, right? I don't think that this is going to sustain for that long. Part of me hopes that it does, so I can continue to buy at 18 to 20% discounts, but that's just my thought. But we'll have to revisit that in a couple weeks.
I think it's a fair point. I think it's a really fair point. And, I know Trump's acting kind of like the Joker right now, just causing a lot of chaos. But if there is method to the madness, then it's not going to take that long to find out. There's not going to be years. I mean, maybe 2 or 3 months where it really takes time for everyone to see if the plan is working. And if it's not, you got the midterms coming up, right? Chris has been talking about this a lot, which is that they're probably not going to risk losing the midterms and they will reverse course. It's just how much damage is done before that happens. Steve, are you buying more NVIDIA here?
Well, man, I bought more NVIDIA this morning.
Oh, wow. Okay. Why?
Because this isn't really scaring me. I want to own more NVIDIA. I don't think the long-term story has changed. I don't get scared of these things. And if you look at a long-term perspective, we've gone through periods like this before. Now, this could take months. This could take a year or two. But the money I am putting in NVIDIA, I really hope I don't need for at least a couple of years. And in 2 years from now, I have to think NVIDIA is going to be significantly higher than where it is today. And I think it's going to make new all-time highs. And I think it's somewhere where I want to be because I think we are still in the infancy of AI. There are also companies, I mean, you look at Robinhood may not be the best example at the moment. I'm not a shareholder, but SoFi does not have tariff risk. I don't think Robinhood has much tariff risk. They got taken to the woodshed. I mean, there are companies that really don't have much tariff risk at all at the moment that are getting taken to the woodshed. This is a total market thing. And like I said before, this is a dial that's most likely going to get dialed in. Companies are going to make deals with the U.S. Countries are going to make deals with the U.S. We got to see how this plays out. I don't think anybody's in a position to say this is going to reverse next week. I think we just got to wait and see. And look, luckily, a lot of mutual funds are paying a big dividend next week, which gets reinvested at great levels. So I'm not that worried right now for long-term investors.
Sam, I don't know when you have to go, but if you have to leave, I'll ask you one last question, and then you can get out of here. This is Sam's Twitter, by the way. Everyone in the chat, you can follow him there. Here's the question for you, Sam. Goldman Sachs sold stocks at their highest level yesterday. Retail bought about $5 billion worth of dip. Who do you think is going to be right, retail or the hedge funds?
The house always wins, man. But at the same time, I don't think, as Steve is saying, like if you have a long-term mindset in terms of your positions, it's very hard to say you're going to lose in the long run. But if you want to make money next week, I would not buy calls that expire next week right now, unless like you're a very seasoned technical trader, because this does not look like something that's going to bounce anytime soon. Because I would have said that 3 days ago, and we clearly did not bounce. But looking at some companies today, I have not bought NVIDIA, but I've bought networking data center companies like Marvell Technology, Astera Labs, which are very high risk, but I've added like such small size to them, if anything. But I think I'm looking more at data center plays when it comes to the networking aspect versus NVIDIA itself. NVIDIA is always going to be the leader, but there are other companies that are doing very well and very profitable, like Arista Networks, ANET, or Broadcom, AVGO, and they got a pretty diverse portfolio in software as well with the acquisition of VMware. So, it's not, those are probably the biggest discounts because that has to do with the CapEx spend for AI. But at the same time, the AI narrative, in my opinion, has not changed. I don't think it has. And if you're a China bull, which there's nothing wrong with being a China bull, but if you're trying to chase that China wave, you got smoked today very badly. Baba is down back in the 1-teens. And I'm not saying that it won't bounce. I'm just saying that today was the day where everything sold off, right? So if you're a long-term investor, unless you got some sort of crystal ball, if you did not buy today, I'm not saying go all in, but if you didn't look at the market today and think like, okay, today might be a good time to buy, then you must think there's further downside. But I don't know. I don't really know. I guess there are certain people who might have certain criteria for how they buy. Like there's certain people where it's like, I only buy in bear markets. Cool. That's your prerogative, right? But I'm not judging it based on where the prices were a couple of months ago, because the earnings that are coming up are definitely going to reflect and re-rate these companies. But if you're thinking long-term with some of these companies, I don't see why today would not be a day to buy.
And look at a company like SL Green, which I'm still in. There's
Nice.
really minimal reason for SL Green to be down 4% today, because they do not have a lot of tariff risk. Now, maybe they need a part for an elevator that comes from overseas, but their revenue is generated from the top tier commercial real estate in New York City. And SL Green was at 80 in November, started the year at 68. So the recent sell, I mean, this was at 59 on April 2nd at the beginning of the week. So for this to be down like that, I think this is a big overreaction by the market on some companies. Some companies have more tariff risk exposure than others. There are a lot of REITs that I don't think have a lot of tariff exposure. And I think that we're going to see a reversal at some point. May not come next week, but I just think that these are good opportunities to be buying certain areas.
Recession. I kind of want to talk about that and the odds of that. Obviously, none of us can predict when it happens, but if it were to happen, Jay Powell would cut rates. That's the best he could do. But what does Trump do? Right? Like, does he get rid of the tariffs? Does he continue to, if you're already in a recession, I mean, like, right? I think Trump might just throw up his hands and be like, all right, it's a recession, but now we're going down with the ship when it comes to tariffs. How do you think the country navigates at that point?
Trump wants rates lower. I mean, he's been very clear about that. And here's another thing. This is more of a rant than anything. The market had all this priced in. Trump's been talking about tariffs for 40 years. You don't change your stance on tariffs overnight. Everybody knew that this was going to happen at some point. And maybe people weren't calling his bluff, but I don't know why anybody would think it's a bluff. The guy can't get elected again. He has 4 years and that's it. And he has wanted to do this. He has both branches and he ran on this. Like, this was a cornerstone of his campaign. To think that he wasn't going to utilize tariffs, obviously people didn't really pay attention to his first term. I mean, all of us knew that this was going to happen at some point.
No, but why did markets pump when he got elected on November 6th then?
They thought it was going to be a better business environment. And look, the guy wants lower rates for a lot of reasons. You have a lot of people behind on their mortgages. You have inflation that's still sticky, and the big component of it is rents. You're not going to get rents down unless the Fed takes rates lower, because you need people to refi to lower the nut. I mean, there's a lot of reasons that you need rates to come down, and the Fed is too stuck on certain data points rather than looking at building an economy that is inclusive for businesses to expand and create more jobs in an era that we're going to need them, because we're going to have a shift in jobs because of AI. So we better have an economy that is inclusive for business and creates opportunities.
I don't think these level of tariffs were priced in, though. Otherwise, the market wouldn't have gone up as much as it did. Right? Like, tariffs were priced in, but not 45% to China priced in. Otherwise, we would have never seen 6,200 on the S&P 500 like 3 weeks ago. I think it caught them off guard. I think April 2nd caught the entire market off guard more than it was already caught off guard. And that's why we're here right now.
I think this is typical of normal retail investors, or maybe even institutional investors. They like to hear the things that are good, and they like to downplay the things that are bad. So, what I heard was 21% business tax rate, which is better, extending the Trump tax cuts out beyond 2024, 2025. What I also heard was tariffs. But I think a lot of people don't fully think about it. Like, okay, tariffs, we don't really know what that means, so we're just going to skip over it. But they hear the 21% business tax cut. So when the election happens and Trump wins, everyone thinks it's going to be, to the moon, because we're going to massively have all this EPS. But what they're then forgetting about is, what did he do in 2018 when he got elected? And that was add tariffs. And he did this. He's going to do the same exact thing as he's been saying, like Steve said, all the time. He was always critical of Bush. He was critical of Obama. He was critical of so many people about, not implementing these sorts of policies. Now he's here. And to me, it worked in 2018 to an extent. Sam, anything last you want to say?
No, I mean, appreciate being on with you guys. Thanks for having me on here, Amit. But I'm going to keep an eye out for doing absolutely nothing that has to do with the stock market this weekend. I don't even want to think about this over this weekend. All right. But good talking to you guys. See you later, Steve. See you later,
Good
Matt.
to see you, brother.
Enjoy
your weekend, Sam.
Later,
Sam. Later. Yeah, Matt, I agree with you. It's so funny because 2018, I wasn't that big into the stock market, but I've told this story before. I had a friend who was like big. I think I was a sophomore in college. He was a senior, he's like kind of a mentor to me. And he was down like 20 grand randomly in December of 2018. Anyone who was trading at that time knew how bad it was. And I was like, why are you down $20,000? And he was like, Trump said something, yada, yada. He was in short-term options as well. So it was just a mess. But the point is, I remember that time tangentially being really crappy. And now that I've studied on some of that history, it was because of the tariff war with China. But in 2019, Jay Powell cut rates and we kind of recovered. So we've been through this story again, is your point. It's just now playing out at a crazier level than before.
Did you see what Trump tweeted today? I'm sure you did because you are on Twitter all the time.
It's your job.
About Jay Powell?
Yeah. Like I'm just seeing it now. Like that's even more evidence that this was all premeditated to force the Fed's hand and to take the bond market rates down, because if the Fed's not going to cut, he wants bond rates to come down either way, and this is how he's going to get them down. And he's also going to lower inflation with the oil markets crashing. Like there's a method to the madness at this point. And let's be honest, a decent amount of the market selling off at this point is probably algos. Because think about it, Matt, did you sell your retirement account?
Nope.
I don't know anybody that did. I don't know many people that were selling, period. And, here's the other thing. If you're in a taxable account, which not talk about retirement accounts, let's just talk about taxable accounts. If you're in a taxable account, what are you going to do? Sell on Monday, buy today at a lower price, but have to pay the taxes on all the gains? You may be at a net loss at that point. It may not even be advantageous to do that. And then for a retirement account, people aren't worried about coming in and out because it's in a tax-free account where they have no capital gains liabilities. So I just think that a lot of this is probably algo-driven and stop losses and just a lot of things getting triggered also. So you got to remember, this is a much different stock market. Take the sectors that are driving it out of it. The way the market operates is much different today than it was in 2015 or 2005 or even pre-COVID. I mean, the high frequency trading is so much different now. A lot of this could be exactly what I just said.
So buy the dip. Right? Like that's it's no one wants to hear this advice, but
I think it's exactly what you're stating. I mean, if you were to look at the S&P 500 and I'm not a technicals guy, but if you were to put kind of a channel of how the S&P 500 works with money supply, and I think it was either you, Amit, or maybe it was Steve or Chris that kind of put it in there. It's like you get to a place where they generally speaking match up over time, right? And what we've seen over the past 6 months to a year is it go exorbitantly in the upper direction for the S&P 500. Meanwhile, the money supply has kind of calmed down a little bit. So it isn't to be unexpected that we have a little bit of pullback and a correction in the market overall. Now, do I think that 20% is maybe a little bit too much? I think so. I mean, I would think that maybe a pullback at the 10% range would be more sufficient, but generally speaking, you have these large pullbacks and then they even out pretty quickly over time, but we'll see. We will see.
Well, I think that is pretty much it for today.
Mate, you gotta play this. Hold on, I'm saying something in the private chat.
And you gotta read Steve's 7 paragraphs.
I'll read it if you want to now that I'm home. But you gotta play this. I don't know if you saw this or not.
I didn't. Let me pull this up right here. What's this guy's name? I always forget his name.
The Einstein of Wall Street. I forget his actual name.
All right, so he's live on the floor of Stock Exchange.
This is the Einstein of Wall Street from the floor of the New York Stock Exchange. Greatest financial institution in the world, or whatever is left of absolute, utter madness here today. I don't know, really. This makes absolutely no sense. There's absolutely no reason for this to be happening. Absolute irresponsibility. The way this story has been disseminated, nobody knows anything more about tariffs than they did yesterday, except some insane number. came out that was figured out by, I don't know, putting two apples, 2 carrots, and a bag of cashews together, dividing it by 2, multiplying by 9, and coming up with a number that absolutely has decimated this stock market. I don't use this word crash lightly, but this was a mini crash, down 5% in my book. Dow Jones Industrial Average closing at the low, down 1,700 points. The S&P 500 closing down 277 handles. That is insane. Everything on that screen is green. Everything on that screen is red. It is bleeding. I have a red-green deficiency. I'm colorblind. That's the only silver lining of the day. I thought it was green. Look at that. You see that? That is what you call blood in the friggin' streets. Everything. Russell down 134. Oil down 8%. I mean, what we got.
Guys, is this going to be me in the future? Is this inevitably where my career goes? Is this going to be me?
If you go there, that means you have a couple of $1 billion. So I hope so.
I mean, this is basically me on YouTube every day, to be honest. Like, this is basically what I do. He's just doing it on the floor.
Promised narrative about tariffs. We got promised prices would go lower. We were promised that this was going to get worse for a little while, but it'll all come out in the wash. I mean, come on. That's absolute friggin' insanity. This is irresponsible. Absolutely irresponsible. After 6 weeks of a completely confused messaging, okay, to then come out yesterday and lay down, unpack this bag of friggin' dirty laundry that made no sense whatsoever. Absolutely no clarity, no direction, no nothing. And look, the market's telling you what it thinks. Are you telling me that this works for anybody? Anybody can look at this and go, this is the way it was supposed to be. This is the vision I had. Come on. Absolutely ridiculous.
Well, street is mad. The street is pretty damn mad. I mean, there's a lot of money that's being lost. A lot of money, even if it's on paper. I mean, obviously there are people that are very, very wealthy that are being eviscerated in this market right now. I mean, if you're
nobody likes to see their account go down. But at the same time, if you're not a day trader, I don't know that there's a lot to worry about here. I mean, do we think that the market's going to 4,200?
Okay, so that's a good question. What do you think is the absolute? I know I'm putting both of you on the spot. I'll answer it as well. But what do you truly think could be the absolute bottom on the SPY?
I put it to you in the text last night, 4,800.
I was going to say 47. So you and I are in the same ballpark. I don't think 4,200 is on the table. I think that's.
Neither do I. I think where we were in 2022 is on the table, 4,800.
Okay, Matt, what do you think? Let me do a poll in the chat.
I think 20% pullback, and we're at 18.5% right now. So 20% would put it around 4,900.
Okay.
I honestly thought yesterday was going to be the bottom as well. So, and I think that what was it yesterday? It was like 535 divided by 620. Sorry, 612 is what I'm supposed to be doing.
So the poll in the chat is 45, 47, 42, or 5,000. 5,000 meaning we basically have bottomed right now. Steve, if you had to put a percentage probability on it, you think like on a scale of 1 to 10, you think this is the bottom right now? Would you put it 50-50?
Yeah, I mean, I think everything in life's 50-50. Either it's going to happen or not going to happen. Look, I wouldn't be surprised if you get a big downturn on Monday and that's the bottom. Or I wouldn't be surprised if it kind of levels out for a little. Nothing would surprise me, is what I'm trying to say. I wouldn't be surprised if you have a massive rally Monday, Tuesday. Wouldn't be surprised if it went down a lot. I wouldn't be surprised if it was stabilized. It all depends on the messaging and what they come out and say. But I do think realistically we could go to 4,800 before it flattens out into earnings. And look, that's just short term. If we get to 4,800 and earnings come out, earnings season is bad with guidance, this could go to 4,200.
Yeah.
But
yeah.
I don't think that that's going to happen.
My gut feeling right now is that Monday is going to be bad. And the reason that's my gut feeling is because I don't think there's going to be any positive headlines over the weekend or on Monday morning about the tariffs going away. So I don't know why the market would bottom today, even though, yes, the pain is bad, max fear, yada, yada, yada. But like that flush out into the close was very telling of the fact that the market is not ready to capitulate here and give Trump what he wants because there's no reason for them to.
I don't think that there's enough evidence yet for it to warrant a potential 30% drop in the stock market. You know, I could see a spot where there's a 20% pullback based off of it, maybe a 25%, and that's comparable to what happened in 2018. You know, when things started getting a little rough towards the end of the year in 2018, there was a 25% pullback, and it reversed for an end of the year after Christmas into New Year's rally, and it kind of kept going up until 2020. But I just find it very hard before we actually start to see knock-on effects, before we even start to see prices go up in the supermarkets, before we get to see, you know, it actually even enacted.
Yeah.
To see a 30% pullback to me is a little bit extravagant.
I mean, realistically, April 9th matters more than April 2nd because that's when the tariff's going to affect.
And think about this. We could have a situation where not a single company's earnings is impacted. And all of this has happened. That's the biggest thing. If none of this has gone into effect yet and he starts making deals and earnings are barely impacted on future guidance because countries come to the table, then all this was for nothing. And it's just because markets are emotional. So we don't have enough information yet. And I think that that's a big problem, that people are too emotional and not enough people have a long-term mindset. And there's a lot of short-term money in there. There's a lot of levered money in there. And that's not good. No, too many people are on leverage. That's not good for a market.
As much as I want to agree with you, if their goal is to get bond yields down, like, where do we see the reprieve? They're going to want more uncertainty. They're going to want Meta to say they're not giving guidance. They're going to want Meta to go down by another 20. Like, they want that. If that is the only way bond yields come down, which it seems like it is.
Well, but I mean, you look at the 10-year, and I gotta go. My wife's,
we're gonna end this in like 2 minutes anyway.
Yeah, one of my wife's friends and her ordered dinner, so I'm starving. So I want to go eat with them. But treasuries, the 10-year, year to date, okay, has gone from 4.58% to 4.01% with zero Fed intervention. Okay, they're doing a pretty good job of getting yields down.
Yeah, but $5 trillion left the stock market too. So it's.
But if the goal is to get yields down to refinance debt, and then the lunacy stops,
yeah.
Once again, for long-term investors, it doesn't matter.
That's fair. If you're long, it really actually it will be a blip in 5 years. So that's a fair point.
I gotta get going. I'm starving. But Matt, if you want to read what I texted you guys, feel free. I would read it, but I'm starving.
Sure. Yep. Do you want me to read it a minute, or do you want to call it a day?
You can read it. Go. Everyone probably wants to hear it now that he said it. So
thank you, Steve. It's always good to see you, bro.
All right, I'll see you guys later.
See you.
All right, so this is a great. I'm surprised that Steve didn't tweet this actually or post it yesterday. But and apologies, I'm not the best reader, so if I stutter like a 7-year-old, you'll understand why. So this is 7 paragraphs, as noted by Amit, that Steve wrote specifically about the current situation that he believes is going on in the markets and what potentially may come.
And he wrote this. It's not ChatGPT. Even it'll sound like ChatGPT. But
it'll sound like it's, yeah. Somebody said it earlier, and it was actually beautifully said. Steve wrote a response of what's going on in the format of a Seeking Alpha article, and I wanted to cry, but I was muted. It's so true. So here we go. Tariffs are a nuanced and multifaceted issue without a definitive right or wrong answer. On one hand, they can bolster local economies by protecting American companies from foreign competition and boosting government revenue. On the other, they risk driving up prices and sparking trade conflicts, particularly for businesses with global operations, many of which are U.S. firms that have shifted manufacturing overseas. As an American, my priority is the prosperity of my fellow citizens. I want an economy robust enough to empower Americans to provide for themselves as well as their families. And I believe tariffs can play that strategic role in achieving that. That's paragraph 1 out of 7. The success of tariffs depends on how they applied and in which goods they target. Consider coffee. The U.S. doesn't grow it, as most comes from Brazil, Colombia, Indonesia, Ethiopia. A steep tariff on coffee wouldn't protect American production. It would simply raise costs for consumers and companies that rely on it as an input, potentially hurting sales across the supply chain if prices climb too high. But there's a flip side. Suppose Brazil exports $100 billion of coffee to the United States at a 5% tariff, while charging 25% on $100 billion worth of American agriculture exports like corn and wheat. Here, a tariff on coffee could be a negotiation lever to force Brazil into fairer terms, saying dropping their tariff to 5% if executed well. This could keep coffee prices stable while boosting margins for the United States exporters, all without disrupting supply chains. America has faced lopsided trade policies for decades, and tariffs could help rebalance the scales. The market's recent freak out over tariffs feels exaggerated. Trump's pro-tariff position dates back to the 1980s and was a pillar of his re-election platform. The post-election rally already baked this in. The sell-off looks like noise, and the real test will be the Q1 2025 earnings. If the S&P 500 companies hold their guidance, this will blow over. If EPS estimates slide, we might see the S&P dip to around 4,800. Either way, I see this as a knee-jerk reaction and a potential buying opportunity, not a reason to panic based on talking heads. So why is the Trump administration doubling down on tariffs now? Trump tied his legacy to market performance. He's not out to tank the economy. I suspect trade imbalances are a convenient cover. The driver might be the national debt. With annual interest payments now topping over $1 trillion, outpacing defense spending, and the Fed refusing to cut rates, refinancing that debt is a pressing issue. The 10-year yield has already dropped from 4.58 to 4% this year without any Fed intervention. By stirring chaos in the bond market, the administration could be aiming to push yields lower, slashing interest rates costs on refinanced debt. Tariffs might be maybe less about protectionism and more about fiscal maneuvering. I think that the tariff strategy could be a critical component of a broader plan that includes tax cuts, deregulation, and reduced government spending working in tandem. Initially, tariffs will increase prices and pull liquidity from the economy. Reduce government spending from the efforts by DOGE could put the government in a position to follow through on the federal tax elimination for individuals making less than $150,000, which I think would ultimately become a $150,000 standard deduction, up from the current, I guess, $12,500 or $25,000 that we have today. A tax cut of this magnitude would put the money back into the Americans' pockets and offset the impact of tariffs while stimulating the economy. Through deregulation and creating a business environment where onshoring was feasible, business expenses would be lowered, encouraging domestic production and softening the impacts of tariffs on American businesses. If these ideas aligned, the outcome could create GDP growth fueled by higher consumer spending and investments in automation and production. Prices might stabilize as deregulation balances tariff effects, and the government revenue could rise, and Americans could see real gains in purchasing power. Here's the last paragraph here. I'm not against tariffs if they serve this purpose. If paying a few percentage points more for goods means more American jobs and higher standard of living, I'm in. American prosperity matters most to me, not Europeans or global interests, but the well-being of my countrymen. The key is precision, as tariffs must be strategic, not scattershot, with a clear eye on the long-term benefits for the American people. I also believe that there is a scenario where all Americans come out ahead of the game and we pay less for American-produced goods through the reasons I outlined. Stephen Fiorillo, Seeking Alpha analyst, and all-around good-looking human being.
He's got to post that on X so that everyone can read it. But yeah, I'll get him to post it so you guys can read exactly what he said. But essentially, what Steve talked about for the past hour, which is that this is a necessary thing that needs to happen for the American worker, but the way it happens is what the market is upset about, right? The types of tariffs versus a universal 10% over this reciprocal half tariff against all these different countries. But the concept of it philosophically, I don't think anyone disagrees with it. Like, I don't think anyone disagrees with the fact that other countries are ripping us off and we have to have some response. And I think the market's ready to deal with a response. The market just wasn't ready for the April 2nd response. That was
I don't think that they're ready for the severity of the response, as well as I think it's an easy thing to make topics on the headlines of news networks. And because of who is doing it, it unfortunately is putting bad taste in people's mouths. And the speed at which it's happening. Nobody likes change. You know, everyone wants to just live their daily lives, be left alone. And I think people are fearful that something like this is going to impact things, you know, comparable to what price increases they saw during the pandemic. And they're like, I don't want that again. You know, I just want to live my life, want to be able to buy my damn eggs, make my kids some pancakes on Sunday mornings, and live the American dream. And I think that they're afraid that what's going on in the news and what they're highlighting could impact that. And I don't think that they want to do that. They hear the word tariff. We don't do tariff, right? But the Americans aren't used to it. And so I think immediately they have this knee-jerk reaction and then the severity of it. And I think it's just half-baked at the moment to kind of not let it play out before you really start to point the finger. So I'm cautiously optimistic. Call that MAGA Matt, call that whatever you want. But I have a strong feeling that in 6 months we'll do way better off. And I think things will not necessarily be where they are today. I think by the time things get enacted, some, if not a large portion of these, maybe even all of them, will be slightly reversed. Not reversed is not the right term, but softened is probably the right word.
Yeah, and you know, obviously the stock market has given its reaction to everything that's going on, and that'll drive headlines as well. But I guess we got to give it time. I agree with what you said as well, I think on Twitter, which is like, if you're not super leveraged, it's just not that scary. Like if your Nvidia money is not your rent money, then Nvidia could go down. You can handle it if you believe in 2 years Nvidia will be back. But if it's your rent money, you're gonna have to take that loss, and that's obviously gonna be really, really hard to deal with. All right, folks, that is it for us. Obviously, a very, very tough day in the stock market. Kind of message from all of us that have been on the channel today is it is what it is, which is an acknowledgement of the fact that none of us really can control it, and that the only way to navigate it is to get more data and see what happens. We had Jerome Powell on today. He basically said he's not going to cut, so it's up to Trump to get these bond yields to come down, which maybe creates more instability in the market. Maybe there's a Trump put somewhere around 4,700, 55,000, 4,800. We don't know. But what is definitely true is the next coming weeks are going to be pivotal to see how the market actually decides to price in the effects of these tariffs, which aren't in effect yet. April 9th, we'll get them in effect. And then how companies starting April 15th report on their earnings. And then obviously how that affects their stock prices as well. All right, that's it. Thank you, everybody, for being here all week. Matt Money, I'm putting his Twitter and YouTube in the description. Please make sure to be following him on both of those platforms. We thank you, Matt, for joining us on a day where you were very needed, especially your analysis right here.
Yeah, thank you for the opportunity to come on and say hello.
And Matt and I will be live later today, Pouncer Weekly. I think Dom's joining us 11 p.m. Eastern.
Amir did not sound good, man. He did not when I chatted with him earlier.
Yeah, he's pretty sick. So it'll be me, Matt, Dom, and Arnie. And for all the Pouncer nerds, we will geek out about Pouncer.
Yep. Thanks all.
All right. Thanks, Matt.
Cheers all. Bye.
All right, guys, that's it. I am out. I hope everyone enjoys their weekend. Try to think about something else other than the stock market. I mean, that's like the best thing I can say right now. I'm about to go on a swing set. So I'm going to go swing on some swings. I encourage anyone, no matter what age you are, to go find a local swing set and swing on it, because A, it's better than the market swings. B, it's fun, especially if the weather's good. So yeah, that's what I'm going to go do. And we'll be back for Pouncer Weekly later today. I'll be back for the Sunday Future Show. Actually, I don't know if I'm going to make the Sunday Future. So we have a dinner at a fan. Okay, so I will update you guys. I don't know if We should be back by 7 though, right? Future 7:45. It's one of my mom's close friends' dinner party. Yeah, okay. So a future show should still be on. I think we should be back by 7 o'clock. If we're not, then we won't have it. But we will be back eventually, definitely on the market open on Monday. Where did you get swinging? Amit is a swinger. I did say I'm going on. I did say I'm going on the swings. You're right. So, okay, I walked into that one. But Cactus Jack says I'll think of Shirley Temples and Dawson's Creek. That is also not the worst idea. Dude, I walked into that swinging joke so badly. Oh my gosh, I completely walked into that. Matt, clap sands. All right, proceeds to chat for another 20 minutes. All right, no, I'm actually out. Everyone should join their local swing club. You guys are hilarious, bro. Like actually hilarious. Anyway, yeah, maybe I need a mocktail tonight. That'd be better, dude. Maybe we need some actual alcohol tonight. I don't even know the last time I drank. I haven't drank in a long time. So actually, no, I drank at the Robinhood event, but that was like a fun little drink. So anyway, I think everyone should do anything that can distract them today, whether it's going on the swings, whether it's a mocktail. It's an ugly day. It's an ugly freaking day. And the only thing you can do on an ugly day like this is try to navigate it with a clear head. And because there is no clear policy, the only clear head that you can have right here is to not be maxed out on leverage and try to weather the storm as it plays out. All right, cool. That's it. I'm out. Thank you, everybody. I can't even talk at this point, dude. I've been talking for like 7 hours at this point today. I wonder how many hours I've been streaming. This week's been like, I think 3 hours in the morning, 3 hours in the afternoon. So it's been like a good 6-7 hours a day. But yeah, I'm out. We'll be back hopefully Sunday night, if not Monday morning. And that's it. That is it for today. Grinder Swing Club. Hold on, where's Grinder? We haven't looked at Grinder for like a couple of days. How bad is it? Dude, Grinder. I bought this thing at 14. The fact that we are not below my average on Grinder is freaking incredible. I mean, it's down 5% today, but you talk about resiliency. It's held up. It's held up. S&P 500 right there, down 0.05%. NVIDIA down another 0.5% after hours. We'll see on the Sunday futures how this plays out. All right. Thank you, everybody. Appreciate it. I'll see you guys on the Market Open and on Palantir Weekly tonight. Bye, everyone. Have a good one.